he is a very vast experience in bank audit. He is a regular speaker on bank audit. We are fortunate enough he is among with us. Thanks to the Zoom. So we connect CA V. Ravindran sir. We also welcome our delegates who have joined today Sunday morning after 3 days holidays. As friends, as we know, bank audit is knocking the door. So today is the second day of our workshop. CA V. Ravindran sir deal with the long form audit report. I believe all the delegates will get benefit from today's sessions. Friends, I want to share about our association. VIP Road Chartered Accountant Study Circle EIRC is a first study circle in Eastern India, established in 1997. The member strength of our association is approx 900. All are the chartered accountant in this study circle. Friends, BIPCA, as usually called BIPCA. BIPCA organizing conferences, symposia, workshop, seminars, group discussions, time to time to develop our members. BIPCA also provide fully equipped AC library to enhance our members to get knowledge. BIPCA also publish monthly e-Jain for updation knowledge of our members. The quarterly journal of our association are widely circulated among the members. CA Subodh Kumar Agrawal, past president of ICAI, year 2013-14, is one of founder member of our association. With these words, I request CA Anil Achalia, co-chairman of our study circle, kindly introduce our speaker, CA V. Ravindran sir. Thank you.
Thank you, Bajrang. Mr. V. Ravindran is a qualified chartered accountant and in practice since 1987. He is also qualified diploma in system audit from ICAI. He is also qualified in insolvency professional, is registered valuer, and also qualified independent directors. He is in the panel of almost all banks and has carried out various audits of bank like statutory audit, content audit, revenue, stock, credit audit, inspection audits, fraud detection audits, document vetting audit. He is also faculty member of ICAI, ICSI, ICMA, Institute of Valuers, and giving lectures on various topics of different subjects on regular basis. Mr. Ravindran presented bank audit papers on various topics such as bank fraud, practical approach to bank audit, loans and advances, forex transactions, long form audit report, tax audits of banks to 29 branches of SIRC of ICAI, and the beneficiaries are chartered accountants and students who are undergoing CA course. He was also chairman of Salem branch of SIRC of ICAI in the year 2017. Mr. Ravindran presented papers during vigilance weeks of bank frauds. He has taken interview of various VIPs like Mr. P. Chidambaram, earlier Finance Minister of India, Mr. T.N. Sesson, and other various dignitaries. He also written bank loan articles on various dailies. He has released so far 107 videos on bank audit and other topics in YouTube channels, and the beneficiaries are chartered accountant students who are doing bank audits. With these words, I hand over the proceedings to CA V. Ravindran. Sir, please start your deliberation. And before that, I would request members to put your queries in the chat box, and we will discuss all of those queries after the deliberation of sir. Thank you. Over to you, sir.
And good morning, friends, and thank you very much for VIPCA, because this is the first time I'm addressing AIRC members, and I actually in my lifetime I visited only once to Calcutta, and that too I have that buri masal. I think so that the food I liked at Calcutta, but I stayed something around some 8 hours at Calcutta and then came back. Then I went to Delhi. So this is the thing that I have. This much of connection that I have with Calcutta. But it's a proud moment for me to address EIRC, because in my lifetime, though I have addressed almost all SIRC branches, And today is my luckiest day because morning I am addressing EARC and in the afternoon I am addressing NARC. So both the things, it's my proud moment of life. This is a starting point because I am addressing other than SIRC. When I address SIRC and all branches of SIRC, and now for the first time you have given me the opportunity to present at AIRC, and even so I have got some 19 days continuous program, and today only I am at Salem. Actually, you are pronounced as Salem, but it is called in Tamil. It is my actual pronunciation is Salem. You are given stress to E. That's all. Okay, no problem. Even we have the same experience when we won the Best Branch Award at ICA level, because my Salem branch has won the Best Branch Award for a continuous period of 16 years at all India level. So very, because our competitor is Silguri. Because normally we used to compete, but anyhow, Salem has placed a very, very vital role in our ICA thing. And coming to the subject, today I'm going to take up the long form audit report. And before going to the session, I want to make a request to you. If you got any doubt, please put it in the chat box. I'll clarify the doubt immediately. And even I've got another important assignment from our ICA. I am one of the faculty member of concurrent audit batch of our ICA. I almost addressed 40 batches out of 68 batches. So that is also the manner in which I have been honored by our ICA. And there is no word to say, because it's the happiest moment in my life because I am addressing AIRC for the first time. And let me go to the topic. I'm going to start up with the long form audit report. Long form audit report is it's a new format. When we are doing LFAR reports from last year, I mean the year before, the normal comment that we are having in the report is no, nil, not applicable, yes. This is the thing in the manner in which everyone is reporting. Whenever you are seeing previous auditors report, you can find the words of no, nil, not applicable in LFAR. But this LFAR new format has changed the entire concept. That means, before going to the presentation, this is a new LFAR which has replaced the earlier circular of 17/4/2002. And this is the circular which is effective from 5/9/2020. That means from last year onwards, this new format has come into the picture. And wherever possible, I will highlight the importance of the LFAR. And whatever be the doubt, please don't hesitate. You can put it in the chat box immediately, and I'll immediately give the answer to you. And it is applicable for the financial year. I think it is applicable from the financial year 2021. And here in this LFAR, they say that the LFAR has to be reported specifically and it is mandatory. This point you have to say, have you verified the cash? Yes, I have verified the cash on such and such date. And this is a denomination. Everything you have to give it in writing. This is nothing but copying the working papers at the LFAR report. And in case this is a thing that they have added, this is not there in the previous LFAR, that is a circular. In case central statutory auditors, they want to have they want to add any additional material points, then they can add it. But it can be done only with the prior intimation to the bank's audit committee. Suppose you have to conduct the audit as per the norms of the LFAR, but if the central statutory auditor wants, suppose for this branch, please add any additional points, that you can add. So this is the additional information that I want to say about this new LFAR. And timely submission of LFAR is required, because whenever you are going for audit in the appointment letter, they say that it has to be submitted along with the audit report. Then you have to prepare the LFAR and submit the same to the central statutory auditor. Then on receipt of it, the LFAR, after it's being scrutinized by the central statutory auditor, they have placed this before audit committee board. or local advisory board for rectification of irregularities, if any. Suppose if they point out any irregularities, those irregularities have to be rectified and submit to RBI within 60 days of submission of LFIR by the central statutory auditors and not by statutory branch auditors. The rule is statutory branch auditor, they have to do the audit and they have to highlight and report the LFIR from their end, and they have to report this to the central statutory auditor. Central statutory auditors, they on scrutiny, if they find any irregularities, they have to submit the same to the ACB audit committee board, and after rectification, the same has to be submitted to Reserve Bank of India within 60 days. And this submission is the duty of the SCA and not duty of the SBA, that is statutory branch auditor. And LFIR, two persons they have to submit. One is the branch auditor. They have to submit to the central, to the management as well as to the central statutory auditor. And central statutory auditor, they have to compile everything and they have to submit the same to the Reserve Bank of India. And LFIR by statutory branch audit, because I am going to cover the LFIR from the branch auditor angle, and not from the central statutory auditor. And because this is going to help a lot of branch auditors. And it's a regular question is there when compared to 2012 surplus, it's a regular question is there, something is added. And the very, very important thing is you have to give the report only in a specific mode, and it is mandatory. You are not supposed to give no, nil, not applicable, yes. If you say no, why it is no? If you say yes, why it is yes? Then not applicable, it's a self-explanatory, then you can go it. But if at all you want to report anything, you have to report it specifically. And the questionnaire of specialized branches dealing in foreign exchange transactions, branch having large advances, recovery of NPA, and clearing house, if any. That means there's a separate questions available for the specialized branches who are dealing in foreign exchange transactions. So this is another important point that you have to see. And branches having very large advances, how to arrive at the very large advances, that I'll cover on a later part. And recovery of NPA also you have to, because there is a recovery bank is there, then for that also you have to give a specific and LFIR. And clearing house operation, because now clearing house operation also they want a special report with reference to SBA. And auditors of foreign branches, for auditors of branches, LFIR has to be sent to the RBI and respective controlling authorities of that foreign country. Suppose if you are the auditor, say suppose you are going to UK and if you are doing the audit of UK branch, then that LFIR has to be sent to directly to Reserve Bank of India as well as to the controlling authorities of that foreign country by the statutory branch auditor. This is the only thing. And I hope if you got the audit of foreign branches, then you can go and visit the branches and you can do the audit and you can have some tour also there. Okay. And another next thing, what is the object, scope, and strategy of LFIR? Here they say that SBA has to ensure whether the branch is following the bank's policy. So here they use the word, the SBA, this branch auditor, he has to ensure that the branch has followed the bank's policy. My suggestion, my question is, do you know what is the bank's policy? So before doing the audit or before commencing the LFIR work, you have to ask the branch manager, sir, can you produce a copy of bank's policy? Normally you will not. Normally you will not get, but in the site you can get, but you have to report specifically that the branch is following the bank's policy. So that is a risk that we are taking. So before reporting the same, you have to take or you have to get the information about the bank's policy. Second thing is, he has to check the systems and processes done by the head office. That means they have divided the work into two parts. One is the system process done at branch, and the other is the system and processes done at head office. So you have to get the information from the branch manager that system, what are the check of the system that has been done at the head office. Because we don't know, what are the areas that we are covering, what are the areas that head office they are doing it. So these details also you have to get it from the branch manager. And the SBA has to check the data entry data control system. That details also you have to get from the branch manager, and the SBA can report the irregularities or adverse in the main report and not all comments. Suppose if you feel that if there is anything that went wrong, and if any irregularity is noticed, you have to report in the main report and not in the form of comments, and not all comments. Suppose if you say that in the Jewel loan application, the borrower has not signed the application. In the Jewel loan application, they say that the weight that is ornament details have not been returned. And sometimes when the key movement is registered on such and such date, one of the officers, they have not signed the key movement. So it's all immaterial. So that means they want us to report only the material irregularities, which directly affect the bank's functioning. So that has to be given in the main report. In case if you are considering anything about the events occurring after the date of balance sheet, suppose if you are upgrading the account of NPA, because on 31/3/2022 there is an NPA account, but that NPA account has been updated or upgraded to the standard. If that is there, then that point is a main irregularity. It is not an irregularity. That irregularity is being rectified. So that point you can cover in the main report. And I'll go with line by line of the column of that you have to cover in LFAR. Previously in 2012 LFAR, that's a very, very important thing. Members, they are not taking a lot of interest, and they say that just they want to fill this and they have to submit this. Anyhow, the separate fee is being paid for reporting of LFAR, but they say that no, nil, not applicable, yes. So now this is being removed by the new LFAR, and the new LFAR has given thrust to the charter accountant that you have to report everything specifically. The first question is, does the system of that the cash is maintained in effective joint custody of 2 or more officials as per the instructions of the controlling authorities? And second question is, have the cash balance of the branch ATMs have been checked at periodic intervals as per the procedure prescribed by the controlling authorities? Here, I want to say one thing. The question is whether the cash is being kept under the joint custody. So that is a clear indication that the cash has to be kept under the joint custody of 2 or more officials. Here, first thing where you can find, there are two types of records available at your end. One is cash stock register, and second one is key movement register. So you can verify the cash stock register. What is cash stock register? A cash stock register is a register that has been placed inside the cash vault. Whenever the manager or cashier, they are depositing the money into the vault, then they have to make an entry. They have to record everything in the cash stock register. That means each and every day they have to entire denomination of the cash that has been kept inside the vault, and both the cashier and officer, they have to sign the cash stock register. That is one. And another important thing is, this is a closing, from the cash register, you can take the closing balance. And in my experience, I want to tell you, and even you can assign this work to a staff, you can ask the branch to give the daily cash balance. That is, what is the closing cash balance on 1st April, 2nd April, 3rd April, you ask them to take the printout. It's only, it may run into some 10 pages. And go to the cash stock register. You ask your staff to compare the closing balance as per the daily thing that has been reported in the system, and he has to compare that with the cash stock register. What is the closing balance that the cash stock register has got? If you have compared it, according to my experience, in almost some 12, 13 branches, wherever I've gone for statutory audit, I found that there was a mistake. There was a difference between the cash as per the statement and cash as per the stock register. So this exercise you have to give to your staff. This is the first suggestion I want to give. And next one is you have to verify the key movement register. First one should know what is key movement register. A key movement register is a register maintained by the branch and it clearly indicates that who are all maintaining the keys, whether it's being maintained by cashier or officer or two officers or cashier or manager. Everything has to be clearly mentioned in the key movement register. The key movement register, there's an indication that who is holding the key and that person has to sign that key movement register. And that means it's a clear indication that you have to call for the key movement register. That is a very, very important thing, that you have to call for the key movement register. You have to see whether on all those days, all the key holders, they have signed the key movement register. That means they have to update. Sometimes the people, that is the cashier, he may go on leave. So at the time when he's going on leave, he will hand over the keys to someone. So at the time when he hand over the key, the cashier has to sign the hand over the key signature, and the new person was taken over from the cashier. He also to sign the key movement register. This is a very, very important thing. And please include this in our audit program, verification of key movement register. This work you can give to your staff. Don't waste the time, because they can do this type of verification. And next one is here. I'm going to the B point. Have the cash balance at the branch being checked at periodic intervals. That means the periodical interval means it. For this, the head office gives us, has already issued a circular. One is the officer has to check the balance at least every month, and in a quarter, the branch head, he has to check the cash stock. He has to check the cash balance, and the same has to be recorded in the cash stock register. Sometimes the head office instruct the other branch officials to come and verify the cash and surprise mode, and they have to sign the cash stock register. So there are 3 types of verification of cash balances. So this you have to take note of it. And if for this you can have this information from the verification of the cash stock register. Here I want to tell a very, very important thing about the cash verification. How to verify the cash? There are 3 methods of cash verification. One is opening cash, normally what we are doing it, and closing cash, what we are doing it. Normally we are doing only opening cash and closing cash. And there are I think there's a 3rd method of verification of cash. That is called as cover method. What is a cover method? Suppose if you are reaching the branch by 11:30 or 12. 11:30 or 12, you are reaching the branch. Now you say that, sir, I want to verify the cash. Then the manager, he will immediately object that, no, sir, we will not allow you to do the verification as the transaction has already been started. We will not allow you to verify. But you can say this modus operandi so that they will definitely allow you. You can ask the manager, please come to the cashier. This is the method. I'm saying only few chartered accountants, they knew this technique. You ask the manager to come to the cashier cabin. Then in the cashier cabin, you are not supposed to enter into the cashier cabin, but you can instruct the manager to go into the cashier cabin. Then you have to ask the manager to pick the cash at random, You can ask the cashier to pick the cash at random of say 2,500, 100, 20, 50, everything. At random, you ask them to put it and ask them to put it in a cover. Then it has to be sealed. Then you have to affix your signature as well as the manager's signature. And the same cover has to be handed over by the branch manager to the cashier. In the evening, they will close the cash. That is, the cashier, when he closes the cash, definitely he will find a difference in the balance. That is between cash balance as well as the physical cash balance as well as the counter cash balance. When they say this, then you have to, the cashier will ask the manager to come to open the cover. If they open the cover, the difference that has been mentioned by the cashier should tally with the cash balance that is put in the cover. If it matches, then that means that day transaction is genuine and there is no difference and there is no point for you to report. If you find any difference, please give the opportunity to the cashier to rectify the mistake. And sometimes due to some wrong entry also, there will be some difference. This has to be rectified. This is the manner in which you have to verify the cash. There are three methods of cash verification. One is opening, and the second one is closing, and third one is counter cash. That is cover method of verification. I think members, have you understood the cover method? If you have got any doubt, you can put it in the chat box.
Okay, sir.
Yeah. And next one is the same thing, just like cash balance, we have to verify the jewels. We have to verify, because I'm telling the way of verifying the jewels. And what is the slogan of jewel loan verification? Wherever I used to present the paper, I used to propaganda that slogan, because whenever we are going for the jewel loan verification, normally you have to take the jewel stock as per the accounts. This is one. And you have to take the master, that is a jewel loan stock register. You have to compare it. Suppose if it has got 758 accounts, alive accounts, then the stock register should mention only 758 or more. Sometimes it will be more. And it should not be less than 758. Why it should be more? Sometimes the jewel owners, they have forgotten, they have not received the jewels. Sometimes there is a deficit. That is, a person has made the payment, but they have not taken the jewels. Sometimes there is a dispute. Sometimes there will be some legal hair issues. So that makes the branch to have more stock than the actual stock. If it is more than the actual stock, you have to analyze the reason and you have to commit that you are in writing, and that point you have to give in the long form report. Now, as per the RBI norms, the jewel should be kept under the transparent packet. That is, when you see the jewel packets, you can see the jewels transparent. If it is not, normally what the bankers they are doing, they are keeping the jewels in a cloth bag, which is not yet transparent, but they are putting a knot on the top of the jewel packet cover, and they kept that jewel cover in the respective bin tray. And whenever you are going for verification, and what few people, I never blame all, only what few people they are doing it, they are counting the jewel packets in a very fast manner, 1, 2, 3, 4, 5, 6, even they never touch the bag. But that should not be the way of doing the jewel loan packet verification. I'll tell the slogan of jewel packet verification is, you have to touch the packet. First thing, you have to touch the packet and sense whether something is inside and feel whether it's a jewelry and count. Touch, sense, feel and count. This is the slogan for jewel loan verification. Touch, sense, feel and count. In one of my cases, when I did the same exercise, I found a small stone inside the packet to cover the weight. So even you can find the fraud by way of doing this thing. And another thing I want to say that you need not bother about the purity of the jewels, because you are going to the audit for 2 days or 3 days. It is not possible for you to go for 100% verification of purity. But the head office has given clear instruction that at least once in 6 months, the jewels have to be appraised by other branch appraiser. This is one thing. And now few bankers, they already started to implement this. They say that jewel appraisal work have to be conducted at least once in 3 months. So you can ask the manager and ask them to show the jewel stock register. And if you find that this jewel appraisal work has been done on such and such date, then that point you have to cover in your LFAR. And what is they say that the gap between periodical intervals, you have to see, it's a very, very clear indication that as per the norms, every month other than the key holders, one officer has to check. The manager has to check the cash balance once in 3 months. And surprise check has to be done by other branch manager at this branch at least once in 6 months. So if that is there, you have to take note of everything, and those dates have to be clearly mentioned in the LFAR. And that means the official's signature and date that you have to take note from the cash stock register. And here, does the branch generally maintain or carry the cash balance which varies significantly from the limits fixed by the controlling authorities of the bank? What is this? This is nothing but it's nothing but retention of the limit. So a branch is being given permission by the head office or controlling authority that you can retain the cash only to this extent daily. If it exceeds if the cash balance exceeds the retention limit, and the same has to be reported to the controlling authorities. The same has to be reported to the controlling authorities. Then you have to ask for the cash retention limit letter. Normally, no branch is having that cash retention limit. That letter, no one is having. And if the branch say that if that is not there, then please ask the manager to give it in writing that we are not having copy of the cash retention letter, and our cash retention limit cash retention limit is 10 lakhs. And Mr. Manisha has asked, what if article jewelry is inside? Then how can we know, sir? Manisha, sir, in statutory audit, it is not possible for us to open the jewel packets, and we are not bothered about the purity of the jewels. That we need not bother. Because if you have got any doubt, you can ask the branch manager to open the bag, but we need not bother, because in the report you can mention that we have test checked, we have checked only the packets without opening that packet. So what is kept inside, we don't know. But you can see, suppose if there are 2 bangles, if you touch, the application says 2 bangle, then you can cover that point. This 2 bangles is there, then we touch, and it's a 2 bangle is there. It's only a test check that you can do it. But if artificial jewelry is being kept, we need not bother, because we have not verified the purity of the jewels. But give this point specifically in your report. And with reference to cash retention limit, and if the daily cash balance exceeds 20 lakhs, suppose though the limit is 10 lakhs, if the limit has exceeded more than 10 lakhs, the same has to be reported to the controlling authorities. Why? Why it is required? Because the insurance of holding insurance policy of cash has been done at the head office. They say that among the insurance policy, they are giving some allocation to this branch. Because if anything goes wrong at this branch, even if it exceeds 10 lakhs, then no insurance coverage is available. So that's why they are maintaining the retention limit level. That letter you have to do it, and compare the same with the daily cash balance. This is the exercise that you have to verify. You can find from the closing balance, the closing balance that you have generated from this system, and what is the retention limit, what all the dates the limit has exceeded, everything you have to take note of it, and you have to ask the manager, have you reported this to the controlling authorities? If he said that, yes, sir, we already reported to the controlling authorities, then you have to go through that letter and see whether all those excess has been reported to the controlling authorities or not. So that the manner you can report. But here, once again, I'll repeat, in this LFAR new format, which is applicable from the last financial year, you have to give a specific report about this. And you have to maintain the working papers also. Because if anything goes wrong in future, then you are caught. Normally, where we are taking shelter is we are doing test check. That means we are doing the test check, but this test check also should be reported in the LFAR, new LFAR. That point I'll cover later. Thus, the figure of the balance, I'm going to see 2. Thus, the figure of the balance, the branch in respect of cash with its ATM tally with the amounts balance with the respective ATMs based on the year-end scores generated by ATM. And if there is any difference, the same has to be reported. So you are going to the ATM, you are taking at the time of verification, you can take the printout one, and you can physically count the cash that is available in the ATM. But normally it will tally, and sometimes it will not tally because the debit has been done, but the cash has not come. And if there is any difference, the same has to be covered in your report. This is the one. And the second thing is that now the banks, they are handing over the cash to the security agencies to to place the same in ATM. And if they did this, and that will be shown in the balance sheet as cash in transit. It will be shown as cash in transit. And here there is another problem, another thing. If the ATM is being maintained by the outsourcing person, then what will be the effect? Whether it has been maintained by the outsourcing person or not, that is, management is different, but the cash is banks. So whatever be the amount it is there in ATM, it has to be clearly mentioned in the bank's balance sheet. Suppose if the bank balance sheet that there's a cash in transit of say 20 lakhs, then you have to call for the cash in stock register. And in that, who has received the cash, and they have to put the signature. And here you have to ask for the contract allotment letter to the security agency. In that, who is responsible to receive the cash, everything is clearly mentioned in that register. So here you have to compare the ATM balance and you have to do the reconciliation work. And if there is any complaint, you have to see the complaint register with reference to ATM. And here the reconciliation work has to be done by the branch and not by you. Don't waste your time. Don't waste your time. The reconciliation work has to be done by the branch and not by you. Then on that, you can verify whether all those things have been properly reconciled and they have been given copy to you. Please don't waste your time on reconciling the ATM cash balance. And in LFAR, there is asset side cash. The fourth point is whether the insurance cover available with the branch adequately meets the requirement of the cover cash in hand and cash in transit. So here they say that first thing is insurance policy. So what you have to do, you have to ask the manager, sir, kindly produce the insurance policy. Normally what the bankers, they say that, sir, insurance is being done at the head office and not at the branch. So we are not having any copy. If the manager say like that, please get that information in writing. And because here you have to give a specific report, whether insurance cover is available. As per the manager letter, insurance policy is available, but he has not produced the insurance policy copy for my verification. That is the report that you have to give it. And the thing is, with the branch adequately meet the requirement to cover the cash in hand and cash in transit. So that means if the retention limit is 10 lakhs and if the cash holding level is 50 lakhs, then to the extent of 50 lakhs, the retention limit has to be increased. So if they increase the limit to 50 lakhs, then automatically insurance cover will be more. So you have to ask for and also they say that cash in hand as well as at the cash in transit. So the insurance policy should cover both cash in hand as well as cash in transit. So you have to ask for the insurance policy and you have to see whether that insurance coverage is sufficient or not. And in that policy, there should be sufficient class coverage of insurance with reference to cash in hand as well as cash in transit. So this is a base. This is a specific 4 things they are asking with reference to cash. Suppose, and what are the other items that you have to take care of about the cash is, sometimes when you are doing the cash verification, it will be objected by the cashier. And if anyone objects to your cash verification, then you have to cover that point in your report. But in my experience, I want to say one thing. And if anyone objects to your audit, then that means there is something fishy. So if anyone objects, then be careful that something is fishy. And soil note verification also plays a very, very vital role. If the branch has got soil notes, please verify the soil note. And as per the rule of soil notes, it has to be sent to the currency chest or the RBI chest once in 6 months by the branch. And you have to ask for the bank circular with reference to soiled notes. And normally we are not counting the soiled notes. If you are counting the soiled notes, then it is very, very cumbersome because it's very difficult to count the soiled notes. And here I want to make a caution that if you count the cash physically, then please wear the mask. Normally we are wearing the mask due to COVID. But even whenever you are entering into the branch and if you are verifying the cash, we have to wear the mask. And when you count the cash, please wash your hand after you counted the cash, because you will definitely get a health issue. So this is the care that you have to take at the time of verification of cash. And next thing is, there is another register called cash excess short register. Because since it is cash, I'm covering all the important items of cash. You have to ask for the cash excess short register. This cash excess short register has to be verified by you. And there is any cash you have to verify, and what are the things that they have reported to the controlling authorities, all those things also you have to verify. If cash is there, such excess is there, no problem. It will remain in the suspense account. In case if cash shortage is there, then the cash balance should tally. Then who has put the replacement of cash? Whether it has been placed by, whether the reimbursement of shortage, say to the tune of 2,000 or 2,500 rupees, have been paid by the cash, the same has to be mentioned in the cash excess stock list. This is a very, very important thing, that verification of cash excess stock is a must one. And another report that you have to see is cash payment into the SB account to the tune of 10 lakhs. If it because SB, a person is permitted to make the payment of 10 lakhs into SB in a financial year. If it exceeds 10 lakhs, then the same has to be reported by the branch to the controlling authorities. Then the controlling authorities, they have to report the same to the head office, and the head office, they will in turn, they report to the regional income tax office, income tax department. So it is our duty to see whether this cash, this shortage, this 10 lakhs payment into SB has been reported by the branch or not. That point also you have to take care. And now this from this year onwards, we are going to have another headache in the cash verification. What is that? That is cash withdrawal. If the party is an assessee and if he is being continuously filing the return for the last 3 years, and on the basis of production of the income tax returns, he is permitted to withdraw the cash to the tune of 1 crore. If it exceeds 1 crore, then TDS has to be made by the branch. And if it is not an assessee, then whatever be the payment, if it exceeds 20 lakhs, then immediately the branch, they have to deduct the TDS. This is an additional thing that you have to verify, you have to cover with reference to cash. And if I got any suggestion with reference to cash, you can ask me. And with reference to jewel loan verification, I have touched the jewel loan verification. So the next important thing that you have to take care in the jewel loan verification is jewel appraiser appointment letter. Jewel appraiser appointment letter. In the jewel appraiser has got a validity period of say 1 month or 1 year, 1 year or 3 years or 5 years. So you are, but after the end of the 1 year, after the end of 3 years, that appraiser appointment should be renewed. So you have to ask for the appraiser appointment letter. And my experience is that whenever I go for a statutory audit, I used to ask this question: who is the appraiser? And if he say that, then I asked the appraiser's name. He will tell this. In a few branches where I have gone for audit, I noticed that the appraiser's son is taking care of the appraiser work. When you ask this, then appraiser says that no, let him learn the job. Let him learn the job, but I will be at the branch. And sometimes this appraiser, he will not be at the branch at all. So this is a very, very important thing. And who is the appraiser? Only the appraiser has to be verified, has to verify the purity of the jewels, has to verify the payment of the items. And this appraiser is an outsourcing person. He should not appoint other outsourcing person to help. So here in one of the branches where I have gone for audit, because that branch daily they are issuing something around 500 loans. So one appraiser is not sufficient. But as per the RBI norms, the branch they have to appoint additional appraiser. But in order to help the appraiser, what the branch they did, okay, you appoint anyone under you to fill the form, to weigh the jewelry and everything. And this appraiser is checking the purity. So an outsourcing person should not outsource other person to help. This is an important thing. Definitely you will find this type of approach at the branch level. And another big mistake in jewel is, because I'm covering all the defects of jewels. Whenever a jewel loan is being sanctioned, after the sanction, the jewelry should be kept under the custody of the officer. But what the branch they are doing, the appraiser is retaining the custody of the jewelry till the evening. So in the evening, the jewelry is being handed over to the officer, only in the evening. So till evening, the holding of jewelry by the appraiser has got no evidence, is not permitted to retain those jewels have to be kept under the custody of the officer who has sanctioned the jewel loan. So this point also you have to take care of in the jewel loan verification. And normally what we are doing, not only in jewels, in advances also, we are seeing only the loan allay. That means loans outstanding as on the particular date of balance sheet, we are taking care. But we are not seeing the loan closed during the year. So my suggestion is, please include in your audit program, verify the jewel loan closed applications. I'll say what will be the difference. There will be a difference between the person who has sanctioned, that is the borrower's signature differs with the person who has taken back the jewelry. And if there is any difference, then that point has to be covered in your report. And next one is the borrower's signature is there, but at the time of closure, it has to be closed in front of the officer, but the borrower's signature is not attained. So these are the two mistakes that you have to verify. And you have to see with reference to agricultural, that is with reference to jewel loan is that because they've got two types of jewel loan. One is agricultural jewel loan, second one is non-agricultural jewel loan. Banks, they say that up to 3 lakhs, agricultural holding certificate is not required per borrower. Suppose if the limit exceeds 3 lakhs, then the agricultural borrower, that is the jewel loan borrower, he has to produce the agricultural land holding certificate. Normally, what the parties they are doing is, they are doing that they avail 2 lakhs today, tomorrow they are availing another 2 lakhs. So thereby they are getting the concession, they have not produced any land holding certificate. But here the jewel loan sanction, you have to do it per borrower concept. That is per borrower, it is 3 lakhs. Yesterday he has borrowed 2 lakhs. Okay, he is within the limit. Suppose if he borrows to another addition of 2 lakhs or 3 lakhs, he has exceeded 3 lakhs. So if that is the case, then for the second loan, the borrower, he has to produce the agricultural holding certificate. If it is not there, that party is not eligible to be paid, not eligible to be get concession with reference to the agricultural loan. So if that is there, for the second loan, you have to recommend for the higher interest. This is also a income leakage area. This is also a income leakage. And other thing is, okay, this is all the thing that you have to see, but you have to go and ask for the jewel loan circular. But in the jewel loan circular, they clearly mention to what extent we can sanction the jewel loan as per gram concept. So everything will be clearly mentioned in the jewel loan circular. And the other thing that you have to verify with reference to jewel is jewel auction. Normally we are verifying only the jewels, but we never cared about the, we means me, we never cared about the auction. So my suggestion to you is you have to go and call for the auction proceedings. So before going to the auction, the party should be given sufficient time to repay the loan. After that, they have to prepare a list and they have to hand over the same thing to the manager. Sorry, they at the regional office. Then regional office, they have to approve the jewel auction list. Then the same will go to the paper or newspaper for the purpose of advertisement and to conduct the auction, about information about the about to conduct the auction. Then on the auction day, lot of people they will come and all the proceedings of the auction have to be clearly mentioned in the auction register. And to what extent the auction has gone, everything has to be clearly mentioned in the auction letter. In one of the banks I gone for audit, I have got 2 auction papers. That is, as per the auction, at the time of auction, normally borrowers will not be there. At the time of auction, borrowers, they will not be there. Here in this case, in one auction list on the particular day, they say that the auction is being done to the tune of 10 lakhs, for example. But when the second auction list, second list that they have submitted to the bank, they say that the auction is being done only at the rate of 8 lakhs. So original auction paper has been, I have got the original paper, but when they given the credit to the loan account, they again get credit only to the only to the extent of 8 lakhs. That means this 2 lakhs have been 2 lakh rupees has been defrauded by the bank. So this is also you have to see about the jewelry auction. So this is the thing I want to say about the cash and jewels. And if you got any doubt with reference to cash and jewels, you can put it in the chat box. Now I am moving to the next area. Balance with Reserve Bank of India, SBI and other banks. Balance with Reserve Bank of India, SBI and other banks. So where we can find this? Where we can find this? You take the bank's balance sheet. You take the bank's balance sheet. They say that cash balance, cash on hand, cash balance, cash at RBI, cash at SBI, cash at IOB, or cash at Bank of Baroda. Suppose we are going audit for, say, Canara Bank. If the balance sheet says that the cash with the RBI is this much, then what you have to do? You have to take the confirmation letter from RBI. Then ask the manager to see whether the closing, that is, whether the balance mentioned in the SB, sorry, the balance mentioned in the balance sheet is as tallied with the certificate given by the RBI. That is balance confirmation certificate given by the RBI or SBI or other banks. And if you find the difference may be due to due to some charges levied by the other bankers. Or sometimes the bank has sent the money to SBI on the day end, but the cash has not reached the SBI only on the next day. Otherwise, we can say that the entry of cash is being passed on the next day. That means they have received the cash belatedly and the entry is being passed on 1st of April. So there is a difference. If the difference is due to cash in transit, you need not bother. In case if the difference is due to charges, what you have to do is you have to give this difference in MOC, Memorandum of Changes. That is charges of IOB account debit to your account, to the bank balance of that bank. So IOB. Suppose if any charge is being levied by IOB, they say that, yes, we have debited and you have reduced the balance. When you do the bank reconciliation, you have found the difference. So these bank charges have to be debited at your branch in the form of MOC. So this is another information I want to tell about the MOC. This difference at the time of reconciliation, you have to find this, and the same has to be reported to the reported in MOC. So this is for branches with the treasury operations available. Sometimes where balance certificates have been obtained, so you have to obtain the balance certificate, and you don't do the reconciliation. The reconciliation work has to be done by the branch and not by you. Please take this point in your mind. But you can verify the reconciliation, whether the reconciliation reported by the bank is correct or not, that you can do the verification. And get the balance confirmation from banks. So before completing the audit, please ask the branch to produce the balance confirmation from RBI, from SBI and other banks. So you have to compare the same. So you have to get the balance confirmation from banks. This is the thing that you have to ask with reference to balance with the RBI, SBI and other banks. This you can find when there is any entry in the balance sheet of that branch. If it is not there, don't bother about this class, and you can say that no balance, so hence this is not applicable. And another thing is, observation on the reconciliation statement may be reported in the following manner. Suppose if you find any observation that they want a specific thing, this is what we are landing into a lot of trouble. Cash transactions remaining unresponded. Here, what is it? The branch say that we have sent the cash, but that is not recorded in the other bank. Then you have to see this from the fraudulent angle also. Because sometimes they say that to avoid fraud, what they do, sir, we have sent the money to IOB. But IOB, they have not included this amount into the account. So at the time of audit, you can notice this. So after 3 days or 4 days, this fund have been reversed by the branch saying that wrong debit in the cash in transit. So if they say that any wrong debit in cash in transit account, then that has to be reported, and that has to be taken care very carefully. And revenue items requiring adjustments are write-off. Sometimes the other banks, they charge something that those charges are not to your bank. Then for that you have to give the MOC. And other credit and debit entries in the statements provided by the RBI and other banks remaining unresponded for more than 15 days. That means today you have sent the cash. After 2 days, it has to be given credit in the RBI account or SBI account or other bank account. If it is not there and if it remains outstanding for more than 15 days, you have to apply your mind, you have to be very, very careful, and you have to analyze the same thing and the reason why it has not been responded, and that also you have to give that point in your report. And where the branch maintains an account with the RBI, the following additional matters, if suppose the branch has directly maintaining an account with the RBI, the following additional matters have to be reported. That is, entries originated prior to but communicated and recorded after the year end in relation to the currency chest operation of the branch or other link involving deposits and withdrawal from the currency. Okay, it's something, they say that they are sending the money to the chest branch. They communicated, but this entry comes after the year end. Can we consider this? Yes, we can consider, provided you have to satisfy yourself that actually the amount of 20 lakhs which has been sent from the branch has been reversed on 7th of April. So if that is there, you can observe this point in your report that the outstanding balance in cash in transit has been rectified by the branch on such and such day. So this is another important thing that you have to take care about the balances with other banks. If you want to submit anything important that you want to report this to the branch management, you have to cover the same in your report. See, the thing is, from this year onwards, you have to give me a specific report, special report, and nil, not applicable. Yes, it is not permitted in this new LFA. and money at call and short notice. Sometimes the bank, in order to, they have got some deficit in money, say they want to meet some commitment, or bank, they want to meet some commitment. What they'll do, they get the money from outside, and within short notice, say within 3 days, within 2 days, they receive the money. So that has been properly recorded at the call and short notice. Here they say that you can get the money only, but when you get the money, that comes in the credit side. Here, the investment made during the year under the head money at call. So for that investment, you have to get the head office permission. So you are permitted to have money at call and short notice, but to make the investments, you have to get the permission from the controlling authorities. From the controlling authorities, that point you have to see, first thing. And what is the total extent of investment that they made in the year? This is one. And at the year end, you have to get the confirmation certificate from the other person, and you have to do the reconciliation. You can say that, sir, we have invested 2 crores under money at call short notice. Suppose if the other parties say that we have got only 1 crore 50 lakhs, that means there was a shortage of 50 lakhs. What happened to that 50 lakhs also, you have to take note of it, and you have to do the reconciliation. And if there is still mistake persists, then they have to be, those mistakes have to be reported, and they have to be covered under the LFAR. And you made the investments. The investment will definitely fetch you some interest or income. So that income should also be properly accounted in the branch profit and loss account. So investment income earned from money at call and short notice should be properly recorded under the P&L account of that branch. So interest earned should be properly recorded. And at the time of making the investment, the controlling authorities would have given a lot of guidance. And all those guidance you have to verify. So controlling authorities instruction guidelines to be followed. So immediately what you have to do, you have to ask for the evidence. What is the controlling authorities instruction? What is the controlling authorities guidelines? You have to go through it, and they want a specific report about this. So unless until you know what are the instructions, what are the guidelines, you will not be in a position to report. So you have to ask for that thing, and you have to make that point in your report. This is with reference to money call and short notice. Sir, if you got any doubt, you put it in the chat box. I think Manisha asked, what is the article that I already given the reply for it. And now they say that investment for branches situated outside India. That means you are permitted to make investment within India, and you are permitted to make investment outside India. If the branch they are making investment outside India, they have to get the controlling authorities permission first. And another important thing, they say that, sir, we have made the investment at New York, US. Then, okay, it is permitted. So you have to see the controlling authorities permission to invest at New York, US. But to what extent? What is the total amount of investment? That also you have to see. And you have to verify, or we have to physically count the physical certificates that is available at the branch. The branch manager, they say that no, sir, the original deposit certificate is with the head office. If that is there, whether the head office has given a certificate stating that we are holding the original certificate. So this point you have to verify. And what are the income that you have generated from the investment that you made outside India also should be verified, and that income should be credited to your branch. So here I will tell the the technique adopted by the head offices. The investment is made by the branch. So the whatever income that is being generated out of that income, that is investment, it should come only to this branch. But what they are doing, this income is being given credit by credit is being taken care of by the head office, and they are not passing the credit to the branch. If that is there, then that point also you can cover in your LFAR. So even you can say that if you have got evidence that among these investments, the bank has gained this much of interest or investment, then the same has to be reported. The same has to be reported in MOC. And purchase and sale of investment done in delegation power as per the instruction. That is, to purchase the investment, to sell the investment, you have to get the controlling authority's permission, then only you have to do it. So investment is made, whether you have to see whether the investment is made at the branch name or head office name. That is also another important thing that you have to see. Next one is the certificates are available for verification. So you have made some investment in US, New York. So the investment made at US, New York, that bank, they have to issue the physical deposit receipt or investment receipt. The same has to be verified by you. So this is another important thing that you have to see about the investment made at the other bank. And the investment as per RBI norms or laws of the country are followed. Suppose if there's some countries there that, suppose if the branch, they want to make investment in Ukraine, now is due to that war situation, investment at Ukraine or investment in Russia, now the bank, that is our India, is taking close call. And that means they say that if those investments have to be made by the branch, then they have to get the RBI permission. So, and that too, you have to make the investment as per the laws of that country. Laws of that country. And you have to see whether those deposits are matured or overdue or encashed. So, and if it is not encashed, you have to ask for the reason why those deposits, why those things have not been encashed. That point also you have to ask. So this is with reference to investment for branches made outside, situated outside India. So any doubt with reference to point number 1 to 4, cash and deposits, was it money balance with other banks, money at call and short notice, and next one is investments of branches situated outside India. If you got any doubt, please put it in the chat box, because I'm going to start with the advances. Any doubts, sir? Okay, I think I'm not getting any response from members whether they are some. And I'm moving to the next thing is advances. Interest not credited should be mentioned in LFAR only. Sir, Manisha sir, if interest details are available, if it is not credited at the branch, you have to pass that entry in MOC. No, because that is the income of the branch. Suppose they say that interest accrued, but the other bank, they say that bank, they say that we have debited the interest in the form of accrual. Then that should be forming part of the branch income. Normally here you have to see whether the investment is made in the name of the branch or in the name of the head office. If the investment is made in the name of the head office, you need not bother. Then the same has to be taken care of by the head office. And in case if the interest is being made in the suppose the investment is being made in the name of the branch, and the same interest belongs to this branch. But what head office they did, they used to take the credit of the income. If that is there, you can debit head office account and credit the interest on investments. So this has to be reported only in MOC. And in LFAR, you can report, you can tell a lot of stories. But if there is any direct effect in the revenue, the same has to be reported in the MOC. Here, full verification. In advances, they say that what is the limit, to what extent you have to verify the advances. Here they say that full verification, that means 100% verification of advances, that is among the total advance. That is, total advance includes funded advance and non-funded advance. Both the things you have to add, and you have to calculate 10% of the aggregating of funded advance and non-funded advance. It is the outstanding balance and not the sanction. Is it the sanction limit? Is it the outstanding balance? Normally, not normally, you have to take the outstanding balance of total. That means where you will get the total advance. That means you are adding all the outstanding balance available as on 31/3/2022. You have to add everything. You have to take 10% of funded and non-funded. So that means for non-funded, you have to take the overall limit. But in non-funded, to what extent they have given the bank guarantee, that details you have to take. Then calculate 10% or more. And 10 crores, whichever is less. In case if the limit is say 50 crores, 10% works out to 5 crores. Then 5 crores or 10 crores, whichever is less. That means the outstanding balance in excess of 5 crore and above, you have to carry out the 100% verification. So this is an important thing that you have to see, because last LFIR, it is 5%, I think. Now it has been overlooked. Please, from this year, from last year, you have to do 100% verification of advances. And here you have to consider both the funded and non-funded balances, that too in advances, outstanding, or 10 crores, whichever is less. Suppose if the limit is 500 crores, the outstanding balance is 500 crores, 10% works out to 50 crores or 10 crores, whichever is less. That means any loan in excess of 10 crores, you have to do the 100% working. So this is the important thing, that while you carry out the audit on test check basis, this is the cutoff point. For this, you have to do this verification. And specific and special details have to be furnished, if any, in addition. Suppose if you say that, no, I have verified advances to even to the tune of 3 crores or 2 crores, that also you have to give. Suppose if you say that, sir, due to some red flag account, I have carried out the 100% verification of that advance, which is less than 2 crores. So that also you can give. So anything that you have considered, that point you have to specifically mention in the LFIR. And what are the details that require the attention of the management or central statutory auditor? What are the details that require the attention of the management? They say that for the following accounts, the limits have not been renewed. So if the limit is not renewed within a period of 180 days from the original due date of the sanction, then that account has to be treated as NPA. Whether the branch has considered that point at the time of outstanding or not, then that is a thing that you have to bring this to the notice of the management. And even sometimes you can say that there is a raid that has been conducted by the by the tax authorities at this client. Then you have to give a caution to the management that the operation of this account has to be closely monitored. Sometimes they say that the operation is not satisfactory. The party has paid only the interest into the account and not the other process. That means you have to see the regular operation of the account, because they are paying only the interest. Then it may be a fund diversion, or sometimes the banks, that is, this party's fund would have been locked at other person's place. So all the details that you have to take care. And if you want the same to be reported to the central statutory auditor, and suppose central statutory auditor, they say that, sir, there are no documents available at the branch. Even sometimes they say that, sir, the branch manager has not cooperated to produce the details. So you can inform this to both the management as well as to the central statutory auditor. Sorry, statutory central auditors. And other thing is, critical comments and test checks have to be reported. Suppose during the audit, if you find, so I'm not satisfied with the comment. Sometimes we can say critical comments means sometimes the government would have, there is bank, they have sanctioned the loan for say plastic industries. In Tamil Nadu, plastic industries are banned. I mean, they've got the ban. So they've got the ban. And even traders also not allowed to do the plastic items. So if that is there, plastic vessels it is permitted and not plastic bag or that is they banned the items with less than the thickness. Say if it is less than 1 mm thickness, they are not considering to be allowed to be marketed in Tamil Nadu. So after sanction of the loan, the plastic industry, and if the government has banned, and if it is comes to your knowledge, then that is a critical thing that account may become NPA. And suddenly, if there is any fire that has broken out, and because of that, the unit may be in trouble, then that also to be considered as critical comment, and that has to be reported in the advances. Test checks. What is a test check? Suppose they say the cutoff is 10% of aggregate of loans and that is funded and non-funded advances. So for other items, you have to do the test checking. If that is for the other items, what are the items that you have test checked, that also you have to give that one in your report. And report is required for all your account verification, almost working paper details. So here the caution is directly given by the bank, by the RBI through Lfar is, even if you do what are the items that you have checked, that details you have to give in your report. That is reporting of all your account verification. That is, it is almost equivalent to the working papers. And this is the format. Is list of accounts examined. So in the previous Lfar, what we'll do, we have test checked, but we have not furnished any details. We have test checked, but we have not furnished any details. So we can ask, suppose if anything goes on, no, sir, in our test check it is not there. But nowadays, because of this new column, that new thing that they have introduced in Lfar, you have to specifically give what are the items that you have verified, account number, account name, and balance at the year end, with reference to funded advance, with reference to non-funded advance, with reference to funded advance and non-funded advance, you have to give a specific report. And what is the total outside of the branches, and you have to give a percentage of verification. Suppose if you verify only 2 accounts, say worth about 2 lakhs, but the total outstanding is 20 crores. So you have to calculate the only 1% of the advance you have verified. Sorry, even 0.1% of the advance you have verified. So here there is nothing mentioned in the Lfar that to what extent you have to verify. But if you report this, they can come to a conclusion that yes, he has verified more than 10%, 12%, 13%, but there is nothing mentioned in Lfar that only to this extent you have to verify. But with reference to advances, exceeding 10% of the. So this is a new thing that they've added in this Lfar. And next thing is credit appraisal. Next point in the Lfar is credit appraisal. What are the items they covered? Whether the borrower, whether the banker, they have complied with the procedures of the head office. That means they have to submit the application, and the manager, they have to before requesting the party to submit the application, the banker, they have to go to the spot, and even before going to the spot, they have to take the CIBIL report, and they have to ask for the KYC. Then on satisfaction with the CIBIL report, they have to go for the inspection, and at the inspection, if the branch manager is satisfied, then he will hand over the application to the party. Then on receipt of the application, then he will ask the party to submit what are the details to be submitted. That is, they have to submit PAN card, Aadhaar card, then 3 years balance sheet, then project report, projections, CMA, and even they ask you to go and get the legal opinion. They ask you to go and get the valuation report. Everything they will ask. And they have to see whether everything is being complied with the head office procedures. So this is the credit appraisal is the base. And on receipt of everything, the manager, they have to process the note. They have to process the loan. And everything has to be properly filled in the process note. Then in the process note, after filling or after giving importance to process note, then the manager, if it is within his powers, he can sanction the loan. If it is exceeds the powers, then he will go to the regional office, then they will sanction the loan based on the process note prepared by this branch. So the thing is, you have to see that whether the branch has complied with the procedures or not. And the loan application can be made either for renewal, new loan or renewal loan or announcement or takeover. So there are four methods. The four methods they can apply for the loan. One is due. For the first time, this customer is applying loan to the bank. Yes, that's a new loan. Renewal. Last year I have availed. Now I want to renew my loan. So that is a renewal thing. For that also they have to submit the loan application. And the enhancement. Sir, last year I availed 10 crores. I wanted 2 crores in addition. That is called as enhancement application. So next one is takeover. That means this bank where you are going for an audit, they are taking the loan from other bank. Suppose if you are going audit for Bank of Baroda and if they are taking over the loan from say State Bank, then for that also the bank that the borrower, he has to submit the takeover application to the bank. And all receipt of this will be filled, will be processed by the manager in the process note. Here I want to tell the professional opportunity available to the chartered accountants. It's some banks they are giving outsourcing work to the chartered accountants in the process note. Suppose if you process the note of that loan, then you will be paid some 5,000 or 10,000 or even 20,000 rupees per process note. But this work is an outsourcing work given by the few banks, and not all banks. They are giving this process note work to the chartered accountants. So this is a professional opportunity I want to submit to you this forum. So process note is also a part of credit appraisal. Then after that, you have to appraise the documents. Appraise the document. How, in what manner you can appraise the document? One thing is, first thing you should know what are all documents. The DPN, even the legal opinion, even the valuation, and what are the papers that are related to the loan. Even the application itself is also a document. So for document also there's a separate presentation. What are the importance that you are going to give towards the document. So here you have to appraise as an auditor, you have to see whether all the documents are intact or not. For example, we will take the legal opinion. You go to the legal, so DPN, first we will start with DPN. So DPN is demand promissory note. You have to see whether that DPN is being properly signed by the proprietor or all the partners or the company, all the directors. Suppose if anyone is being authorized by the partnership deed or limited company, then that has to be verified by you, whether the document execution is done by the authorized person or not. One. And you have to see the validity of the document. The DPN is valid only for a period of 3 years. So before the end of the 3 years, the branch, they have to obtain a revival letter or acknowledgement of debt in addition to the DPN. Because once if it passes 3 years, then this DPN is getting time barred. So to get the life to the loan, the bank or branch, they have to obtain the revival letter or AOD from the borrower. This is one thing. Next thing we can see about the legal opinion. In legal opinion, normally what we are doing, we are reading the legal opinion, we are reading the tracing of the title. And here I want to make suggestion, kindly read the legal opinion from top to bottom. Don't go to the last para and see that this party has got the equitable right to create the mortgage. Don't do it. You have, if at all you want to verify the legal opinion, you have to verify all the columns, there is all the tracing of title from the top to bottom. Here, I want to suggest to you, you should be a master in reading the legal opinion, or you should be a master in reading the documents. So where we can get this experience, you please go to your advocate's friend office and ask him to give his office copy. You go through the legal opinion that he has already given. Thereby, you can gain the knowledge. So in my lifetime, I have read more than 4 lakh documents. So here, you can, in the legal opinion, you have to trace the title. So the tracing of title should be done on your own and not by, you can refer that with the legal opinion, but tracing of title should be done by you. So what are the things that you have to see is, first thing is, one is a document. That is the document which is standing in your name. And you have to go to the parent document. You have to go to the parent document. Then all the revenue records in the form of Patta, Chitta, Dangal, Kandayam. So in Tamil Nadu, it is called as Patta, Chitta, Dangal, Kandayam. I don't know what is there at Calcutta, that is West Bengal. Here, I say that you have to verify the revenue records. Then go to FMB sketch or survey plan. And that is required to see whether that property is being within the permitted area or in government purview. Then you have to take encumbrance certificate for 30 years. That is 30 years you have to take. Then you have to see the legal heir certificate or death certificate if it is required. So based on that only you can trace the document. So a legal opinion is your document, and you have to see whether whether the advocate has given the opinion correctly or not. That point also you have to see. And next one is valuation report. Here with reference to valuation report, I want to tell, a valuation report has got a validity period of only 3 years. Valuation report has got a validity period of 3 years. So that means before the end of 3 years, once again, a fresh valuation has to be done by the other engineer and not by the same engineer. So this point you have to take note of it in your audit report. When you are seeing the data valuation report, if it is within 3 years, you can leave it. Suppose if it is at the end of the 3 year, or sometimes it may cross the 3 years, then in audit report, in LFAR, you can say a report saying that the valuation report has become invalid. So fresh valuation report has not been carried out. So that point you have to bear in mind. So regarding valuation report, what are the things that you have to say? Now the style of presenting the valuation is, in the first page, the engineer, the data of visit, data of report, everything will be there. And they mention the valuation and valuation in the form of market value, that is guideline rate, post sale value, and even now they started to include the liquidation value also in the valuation. So all these valuations have been quoted by the valuer. Then after that, you have to see whether the valuer has filled all the columns correctly or not. Sometimes now Supreme Court said that the loan has to be given only to the approved properties, because that means if those properties which are not approved, then there is no eligibility towards loan. So if you go through the valuation report, there is one column say that whether there is a plan approval available for this project or not, for this property or not. The engineer cleverly leave the column blank. If they did it, then you have to cover that point in report. Indirectly, I want to say that at the document appraisal, if any column is left blank either by the advocate, either by the valuer, that point you have to cover in your report. And quick mortality account. What is a quick mortality account? This is also another important thing that you have to bear in mind. Suppose if a loan has become NPA, immediately within 12 months from date of sanction, that means something is wrong with reference to sanction of that loan. So it may give chance to the fraud. So quick mortality means immediately on sanction of the loan within a period of 12 months, that account has become NPA. So you have to be very, very careful with that type of accounts. So quick mortality account also you have to give. But normally we are getting a list from the head office about the quick mortality of the account. That's a report that is being generated by the bank, quick mortality account. And if that is that, you have to verify all the documents of that quick mortality account very carefully. Because here I want to say two caution. I think this also will tell later. One is, if any fraud is undetected during the course of audit, then the auditor is held personally responsible for the loss to the bank, apart from losing your insured, apart from losing your certificate, facing the insured action, facing the court action, facing the regulatory actions. The first caution that you have to bear in mind while you are doing the bank audit. And the second caution is, RBI has already started to issue notice to the chartered accountants. RBI has already started to issue notice to the chartered accountants for wrong classification or non-classification of NPA. For the wrong classification or non-classification, they already started to issue notice. Please be careful that all the accounts have been properly classified as NPA. And that's a quick mortality. That is immediately on sanction of loan, sanction of the loan within 12 months. If it has become bad, then that point you have to report specifically in your LFAR. And feeding of interest and the review of interest rate. See, this interest rate you can find from the sanction letter. So what is the sanction letter interest? So that interest should be fed into the master area. So whenever any calculation, whenever any transaction that is being taken place, and whenever the branch is charging the interest per month or per quarter or per annum, based on this interest only, the master interest is being calculated by the bank. In case if the interest is being either increased or decreased, the same has to be given effect in the master details. If that is there, then automatically system will calculate the interest. So you have to see in audit that whether the correct interest rate is being fed into the system, and if there is any change, whether the change has come into the system at the date, from the date in which the change has to come, whether the same is being recorded in the system by the branch correctly or not. That point you have to see during your audit. Next one is frequent renewal or loan over a short-term loan. Here I want to ask you one question to you, because I want you to answer it. What is the difference between review and renewal? What is the difference between review and renewal? You can put it in the chat box. What is the difference between review and renewal? What is the difference between review and renewal? Review, if you want to use the word review, where it will take place. If you want to use the word renewal, where it will take place. We can say, what is the difference between review and renewal? I think members, please participate, because you have to give the answer. Review and renewal, because a very basic thing in the audit. So review is the word they are using for the term loan. Review is the word they are using it for the term loan. And renewal, you can use it for all the working capital limits, just like OD, just like CC, they can use the word renewal, because in working capital limit, there is a validity period. Say 1 year only you can use it CC. So at the end of the 1 year, you have to renew the loan. But review means a term loan is being sanctioned for 5 years, but every year the manager has to review those term loans every year. So this is based on the sanction letter. So that is the difference between review and renewal. That's the main difference. And frequent renewal, that means they renew the loan. The loan has already been overdue, but they renew the loan. Say, I want it renewed for 2 months. I want to renew it for 1 month. So in that manner, they are doing it. And sometimes they are going for ad hoc Sir, I need ad hoc limit. I need ad hoc limit for 10 days. I need ad hoc limit for 15 days. That's a clear indication that proper credit appraisal is not made by the bank at that time when they sanction the loan. And credit rating from the RBI's approved credit rating agency. This is also the latest thing. Suppose if we avail any loan exceeding 5 crores, the bank they can insist the borrowers to get the credit rating from the approved agencies. There's a credit agency list approved by the RBI. So if the loan exceeds 3 crores or 5 crores based on the bank's policy, they have to get the credit rating from the RBI's approved list. So if it is not there, then that point you have to cover in your report. Now, it's only previously we have discussed about the credit appraisal. Now, the loan is being sanctioned and now it is being disbursed. Any loan sanctioned beyond delegated powers or limits assigned to the branch. Here, you have to see the word delegated powers. What is a delegated power that you have to see? Delegated power means a head office cannot sanction all the loan. They delegate some powers to the branch manager according to their status. That is according to their category. How many categories are there at the branch? One is branch manager, assistant manager, branch manager, senior manager, chief manager is scale 4, assistant general manager scale 5, DGM scale 6, general manager scale 7, and beyond that they can say that CGM at the scale 8. So the board, they have given the powers to sanction to this charter, to these branch managers. They can use the power to sanction based on the so you have to see as an auditor whether the branch manager in the sanction, the loan is sanctioned by the branch manager, you have to ask for the category and under which they belong. Suppose if it's a senior manager, then you have to ask for the delegated powers. For this, you have to ask for the delegated power circular or delegated power book. That is on which you can arrive at the delegated powers. So, as an auditor, you have to see whether the loan is beyond delegated powers or not. You have to give a specific report. If you say that no, the manager has acted on good faith and has acted within the delegated powers, you are taking this. It is up to you to decide whether the manager has sanctioned all the loan within the delegated powers or not. Here, loan disbursed without complying with the terms and conditions mentioned in the sanction letter. There are how many conditions are there? There are 4 conditions. The sanction letter has got 4 parts. One is the party details. Second one is pre-condition disbursement. That is before loan is sanctioned. Then before disbursement, the party has to fulfill the following conditions. Post disbursement, after sanction, the party has to follow the following conditions. And fourth one is general conditions. That is changing of interest, withdrawal, that has been published in newspapers. Everything will be clearly mentioned in the general conditions. So there are 4 parts. So here you have to report the loan disbursed without complying with the terms and conditions mentioned in the sanction letter. That means the clear indication that the same has to be reported has to be mentioned in the sanction letter. What are the items they mentioned in the sanction letter? They have to give the thing in the, that is as an auditor, you have to see whether the borrower has complied, whether the branch has complied, all the terms and conditions as per the sanction letter or not. So for this, what you have to do, you have to go and read the sanction letter very carefully. If there is any specific thing, then that has to be reported. Loan given to companies to buy back securities. Suppose if because buyback of securities, there is a provision. It's a loan given to companies to buy back securities. If any loan is being given, normally to buy back our securities, no loan has to be sanctioned. If at all it has to be sanctioned, it has to be approved by the head office. Suppose if any loan is being given by the branch to buy the to buy back the securities, at that point you have to cover in your report. Now we are going for the documentation part. We have seen the credit appraisal. Now, next one is we have seen the sanction disbursement. So now we are going for the documentation. What are the things that you have to see is, this is specific, I think they asked in LFAR, loan released without execution of the documents. So here, they say that all loans before release of the all loans before release, it is not before disbursement. So here you have to take care of date of sanction of the loan, date of execution of the document, date of disbursement, then date of availment. All these four things you should know. Here, the date of document is very, very important. So if he is borrowing term loan or working capital loan, they have to execute the document first. So only after execution of the document, the funds have to be transferred to the other party. So if it is not there, and if no document in the form of a DPN, in the form of other forms with reference to guarantor form, with reference to that debtors, with reference to stock, and if no form is being filled, no form is being certified, or no form is being signed by the borrower, the loan is being released, then, and that too, if there is no document is there, then that specifically in LFAR. So loans released without execution of the document also you have to. I think what are the deficiencies in documentation? Sometimes every document requires a witness. With reference to witness, the Act says, normally what we used to say that, what is the total number of witness? What is the total number of witness? We used to say 2. But normally it is 2, okay. But it is less than 2, it is not permitted. So they say that minimum 2. They say that it is a minimum 2. Suppose if the witness is there and if there is any deficiency, that makes the document as defective. And the borrower has not signed the documents. That is also a deficit. And the amount and figures differ. Amounts and figure differs with the loan amount mentioned in the sanction letter. That is also a deficiency. And the documentation has got the invalidity, that is, has exceeded the time bound limit. So all these deficiencies should be reported by you in your audit report, and that has to be specifically mentioned, specifically given in LFAR. And non-registration of charges, because here there are 2 types of charges, and with reference to limited company, you have to create 2 charges. One is charges. Every limited company, they have to create charge against the property whenever they avail the loan. This is one. And they have to create the MODT. The MODT concept means Memorandum of Deposit of Title Deeds, which is nothing but registration of the mortgage deed at the register office. This practice is available, is prevalent in Tamil Nadu. I don't know about at Calcutta. I don't know whether MODT concept, that is Memorandum of Deposit of Title Deeds, or mortgage concept is there at the Calcutta or not. So if that is there, that has to be registered. With reference to non-companies, you have to get the property reported under the mortgage before the register. So non-registration of charges, if any, that also you have to cover in your report. And no guarantor. Action letter says that the branch, they have to obtain a bank guarantor from another person, and if the loan is being released without obtaining the guarantor and without getting the signature in the guarantee form, then that is also another deficiency that you have to cover in your report. And loan against deposit without marking a loan. So loan against deposit is being made, and whenever the branch, they sanction the loan against deposit, the original deposit is received by the branch, and they have to keep along with the loan application, and to get the cancelled, they have to get the signature of the borrower on the back side of the deposit receipt. and the branch, they have to create lien in favor of the bank. And here, the deposit loan will not be sanctioned because the system takes care. A lien must be created at the branch level. So loan against deposit without marking a lien, if it is there, then that point you have to cover, you have to report. That means you have to verify all the deposit loans. And here, review monitoring supervision. Review monitoring supervision. Periodic review of advances. What is periodic review? I already said periodic review concept is applicable for the term loan. Normally, the term loan has to be reviewed every year. They say they made the machinery sanction. The branch manager has done and has gone for inspection regularly. He saw that machinery was running. There are proper persons are there to operate the machinery. That is also clearly stated in the machinery verification, and electricity supply is being regular. So every year, so the loan has to be reviewed at least once in a year with reference to term loan. So whether periodic review is being conducted by the branch or not, that point you have to report. Next one is balance confirmation. So normally what we are used to get for the debtor balance confirmation or creditor balance confirmation, in bank also, they have to obtain the bank balance confirmation from the party. In case if there is any difference, and if in any case the borrower put any case against the bank, then they will produce this balance confirmation. So as an auditor's routine rule, you have to see whether the branch has obtained all the balance confirmation thing from the customers. This is a specific report that you have to take the customer. Next one is AOD and RL. So here I will tell a DPN is valid for a period of 3 years. A DPN is valid for a period of 3 years. So before the end of the period, because if without if DPN is time bound and the bankers, they are not to go for the case. They are not permitted to go before the court of law. If that is there, then this DPN has to be renewed by the customers. This is the branch, they have to get a fresh DPN. That fresh DPN is called as AOD or RL. AOD means acknowledgement of debt, RL means renewal letter. So if AOD or RL is being obtained by the branch, then the same has got the validity period of another 3 years. So this is also another specific thing that you have to cover in your audit report of LFAR. And voting for renewal review 3 months to 6 months and over. Here, one has to see a cash credit loan has got a validity period of 1 year. And at the end of the renewal period, the rule says it has to be renewed. The renewal application has to be submitted by the party before the period it has got renewed. So that is before 30 days before the renewal date, the party has to submit all his loan application, then previous balance sheet, then project report, then CMA report, and with the request that it has to be renewed. In case the limit is not renewed, the maximum period they permitted is 180 days from the original due. So from the original, they have to renew for further period of 1 year. If it is not renewed, then the party is then that account will become NPA. And sometimes the managers, what they are doing some shortcut, short renewal, long term, some short review, temporary reduction, temporary renewal. They are using everything, but temporary renewal of 180 days should be part of 180 days. So this is a thing that you have to bear in mind with reference to renewal and review of the accounts. Here, the renewal is due, review is due, but nothing is being taken care of by the branch. Then that point you have to give it in your report. And in case of this, if you find any major discrepancies, so they have not followed the sanction letter. And when you visited the unit was not functioning. When you visit the unit, if you felt that there was unrest among the laborers. So major discrepancies, not only in documentation, you have even in the functioning of the industries, functioning of the trade also you can cover that point in your LFAR. But here I want to make a request, please get it done. Even by way of test checking also you can find, you can do this. Please try to read all the file copy of the party. The file copy of the party, you can come to know all the requirement that has been made by the party to the bank. In case if the party has made a complaint against the manager, being filled at the file. So if you should have the habit of reading the files. So there's a major discrepancies are there that also got to do it. Next one is stock statement. So if the party has availed cash credit loan, then the party has to submit the stock statement once in every month. And the date of submission is clearly mentioned in the circular. The statement has to be submitted by the party within 7 days, within the 10 days, the following month, and that has to be submitted, both the stock statement and data statement. If those statements then the party has to pay penal interest at the rate of 1% per annum from date of sanction. Sorry, from date of due date of submission of this. If it is not, then penal interest has to be submitted. So, with reference to data statement, in data statement, they are considering only the age of the debtors and associate concerned debtors, because in the data statement, associate concerned debts or sister concerned debts should not be included. Why? Because they are considering only the loans above 90 days or 120 days. So everything you can find from the letter. So stock statement and data statement that you have to see. Other statements. What are the other statements? Even they can show the staff appointment details also they can support. Am I audible now? Because suddenly connection has gone. Am I audible now, sir?
Yes, sir, you are audible.
Yeah, suddenly connection has gone. So
Not an issue, not an issue. Please continue.
Because I request members to put their doubt in chat box. I think so far only one friend, that is Manisha, yes. Raise the doubts. I think let us hope in the last they will ask. Stock statement, data statement, and other statement, and DP calculation. What is DP? DP means drawing power. So DP calculation, there is a separate exercise how to do the DP calculation with reference to debtors, with reference to stock. You have to take total stock that is as submitted by the party, less obsolete stock, less creditor stock, less LC stock. LC stock should also be removed from the total stock. The balance left is paid stock. From the paid stock, you have to deduct the margin. The remaining balance is called as drawing power with reference to stock. With reference to debtors, total debts, less debts above 90 days, you have to remove from the total debts. Then for the remaining debt is called as paid debtors. In that paid debtors, you have to deduct the margin. Margin means it's the owner's contribution. The remaining amount is called as drawing power. So the DP you have to calculate in the form of stock. DP you can calculate in the form of debtors. You have to add both the DP, then arrive at the total DP, then go to the outstanding balance. The outstanding balance, that is the bankers, they have to allow the operation less than the DP, and they are not supposed to allow the operation beyond, that is beyond the DP. Here, the one has to see that is only to the extent of drawing power available, the customer is permitted to do the operation. That is called as DP calculation. And audited financial statement. In every year, the party has to submit the audited financial statements of, say, 31/3/22. They say that the audited financial statement of 31/3/22 has to be produced by the party to the banker on or before 31/12/22. If it is not submitted, then penal interest will be charged. So this point you have to see, because as per the sanction letter, the party, suppose if you are going audit for the year ending for the period from 1/4/2021 to 31/22, then the party has to submit the audited statement as on 31/3/2021. If you have submitted 31/3/22, don't worry at all, it's okay. But when you are going audit for the year ending 31/3/22, you have to see whether the party has submitted all the audited financial statements as on 31/3/21 on or before 31/12/21. If he has not submitted the audited financial statements on or before 31/12/21, then you have to, then the branch, they have to give audit of, so okay, I'll do it. I think Sham was asked this question. Shamal asked, kindly give some ideas about the audit of ROSMAC, that is a recovery branch and the loan sanctioning branch. That is okay, I'll tell about that. Audited financial statements have to be given importance, and the branch, they have to get the details from the party. Otherwise, the banks, they have to charge the penal interest. And I'm coming to the question of Shamal. Audit of ROSMAC is a concert, ROSMAC and securities recovery branches. See, once a loan is being sanctioned, it's a hub is called as ROSMAC. It's a centralized thing that they have to sanction. Suppose if you are the auditor of the branch, ROSMAC, and all the advances never belong to ROSMAC. All the advances belong to the respective branches. So here in ROSMAC, you have to see what are the areas they are doing it. First thing, they are going for inspection and they are preparing process note. They are sanctioning the loan and they are forwarding this sanction letter to the respective branches. But if you are auditing the ROSMAC or hub branches, then your fees will be very less when compared to the branch, because there is no limit. That is, there is no advances that is being reflected in the ROSMAC except staff advance. So the audit things, you have to audit, it is just like auditing of regional office. You have to audit the management decisions of the ROSMAC. So then with reference to recovery branches, you have to concentrate on the, that is file which the branch they have handed over to the recovery branches. Then on when the file comes to the recovery branch, all the recovery list, the branch, they have to take list and they have to send notice to the borrower saying that if the amount is not paying within such and such date, then we will issue surfacing notice under section 13(2). And if you have not made the payment within 60 days, then we will take the possession by way of issuing notice under section 13(4). Before issuing 13(2) notice by the recovery branch, one has to see that that account has already become NPA. That means only NPA accounts are eligible to be issued notice under section 13(2). So it's a very, very simple. because there is no advance available at this branch. Even the advance, only recovery thing is being sanctioned. Recovery proceeding, recovery power is being sanctioned, and the original advance figure lies with the branch. So you are in both the recovery branches and both the at ROSMAC, that is hub, sanctioning hub. You have got only the management audit efforts. Whether the decision taken by the ROSMAC is correct, or whether the ROSMAC is following the banking guidelines, whether they have sanctioned a loan based on the delegated powers given to them. But the sanctioning is done at the ROSMAC, but the release is being done at the head office. They are transferring the limit to the branches, and in all the documents have to be executed by the borrowers only at the ROSMAC, and all the ROSMAC team, ROSMAC people, they are retaining the document, they are retaining the legal opinion, they are retaining the valuation report. Only copy of this they are handing over to the branch. This is a role about the what's that? This is a role about the ROSMAC. And if stock statement is not being continuously submitted, no stock audit is conducted, but payment is coming, whether regular or some other clarification. I think Manisha asked stock statement. See, here you have to calculate the drawing power only based on the stock statement submitted. If stock statement is not submitted, then drawing power has to be taken as 0. If drawing power is being taken as 0, then the branch is not allowed to allow the party to do the operation. So go to the outstanding balance. If the outstanding balance has exceeded the drawing power for a continuous period of more than 90 days, then that account has to be treated as NPA. If stock statement is not submitted on time, or if no stock statement is submitted, then the bank, they have to charge penal interest till they submit the stock statement. And coming to the question of Mr. Praveen, some banks allotting currency chest branches. Yes, sir. And may you see, this is the thing in for LFAR also. You have to do because it has been you have been asked to give LFAR, but here with reference to currency chest branches, there is no advance. Only you are verifying the cash and you are only verifying the staff advances. But if it is not there, then you have to give whether the cash that has been kept at the chest branch or at the double key or not. Everything that you have to report, just like this LFAR. But in LFAR of currency chest, there is no advance except staff advance. So you have to report. I think you have to report whatever is eligible to be reported. You have to report. But if you are getting the currency chest branches, you are a very what's that? You are not a lucky person, because when you get the branch audit, you will get more fees. But for currency chest, you will be paid something around 15,000 rupees or 25,000 rupees. You are an unluckiest person. But anyhow, everything has to be reported in the LFAR. And Sanjay Mehta sir asked, sir, if sale purchase is not routed through the CC account and only interest part have been classified, what we have to do? It's a very good question, sir. Because whenever you are seeing the cash credit account, you can see only the interest and no further amount is being given credit to the account. You can say that there's a specific column in the LFAR, whether all the cash, whether all these sales processes have been routed through the account. You have to say that no, with reference to this customer, only the interest is being paid and all the sales have not been routed through this account. And if it is not there, then you can went further and you can recommend to the head office or to the controlling authorities, say that a care has to be taken into the account, because the branch manager has to go and verify the genuineness of the transaction of the account. Even you can recommend that, because we have to safeguard the interest of the customers. And Shyamal Sarkar, and here and Manisha sir, you asked about no stock audit is conducted. Okay, if no stock audit is conducted, it is not our botheration, because the stock audit appointment is being done by the head office or by the controlling authority. If no stock audit is conducted, you can give a clear report saying that no stock audit is conducted. And coming to the question of Shyamal Sarkar, can I physically verify the custody of gold ornaments in the bank branch in my own manner? Yes, sir, you can. If you want to verify the gold, if you want to verify the gold, but you can verify the Jolan packets. But if you want to verify the gold ornaments, it is up to you to decide. You can verify even the purity. Suppose if you have got any doubt, you can verify the purity of the jewels. You can do it. Thank you very much. Now I'm getting a lot of response from the members. Now I started to get the questions. Next area is stock audit and related items. So if any stock audit is being allotted, I think was raised this, Manisha sir, if stock audit is there, the stock auditor has to conduct the stock audit as per the appointment letter. Recently, when you look into the stock audit format, it is almost equivalent to credit audit report. So if stock audit is there, you have to go through the stock audit. You have to see the stock auditor report carefully, whether the stock auditor has given the clear picture or not. The stock is not there, whether there is a deficient in stock, everything you have to take note of it, and you have to give that point in your LFAR. And allotment of stock audit, it is left to the decision of the branch. Here I want to tell another professional opportunity available to you in stock audit. How to get the stock audit? Above what limit, Manisha asked, above what limit stock audit is required? Normally they are fixing 1 crore and above. 1 crore and above. Few banks they are fixing 1 crore and above, and few banks they are fixing 5 crores and above. But 1 crore to 5 crores, even few banks they are saying that it is between 1 crore to 5 crores, they are fixing 10,000 rupees or 15,000 fees, and above 5 crores you will be paid some 25,000. So the fees also depends on the quantum of the amount. The stock audit is being allotted based on the loan sanction and not loan outstanding. So stock audit is being appointed, given by the bank to the auditors on based on the stock, based on the loan sanctioned and not loan outstanding. This point you have to see. Here I want to tell how to get a stock audit. If you are if you want to get the information now, recently a few bankers they started to call the stock audit empanelment through online. But whenever you get you go to the regional office or zonal office, you have to go and meet the inspection department. There they will give you a lot of information from where you can get the stock audit. But we are not supposed to make the rowing inquiry. We are not supposed to make the rowing inquiry, but you can get the details from them. Then if they can say that, sir, panel is open, panel is applied, is there, then even in white paper also you can apply. So everything they will give you the information. So my request to the fellow members, please try to go and meet the inspection department of the respective bank. Say regional office, zonal office. Because if the inspection team, they will definitely give the information to you. But if the panel is available, you can make the application. But there is a prescribed format. Sometimes they say that you have to apply the stock audit through online. If that is there, there's a cutoff date and you have to apply. I think this after March, after completing the March, you can go for even for stock audit or revenue audit also. Recently, I heard that all the private sector banks, that is in the form of South Indian Bank and other private sector bank, Western Bank, no branch audit is being allotted to the chartered accountants. All the branches have been audited by the central statutory auditors. So we are even that is audit assignment from the private sector is getting reduced is getting reduced, and we have lost the opportunity of doing the private sector branches audit. But soon it may also come to us also, because they have already got the proposal that all the branch audits have to be conducted only by the head office, only at the head office by the central statutory auditors, because they say that we rely on the inspection work carried out by the respective bank's inspection department, and they want to compile all the balance sheet figures at the head office. But we hope it should not happen, because if that is happen, I think a lot of people, lot of youngsters, they lose their income. So this is a caution I want to say. Even in the latest thing which I heard, not heard, I have gone through, the bank audit assignment has to be done only to those concerns who are under the peer review. Suppose that means nowadays peer review is being done only for the firm. Individuals, most of the individuals are not subject to peer review. Suppose if we want to get the audited, then your concern must be coming under the purview of peer review. So it is effective from 1/4/2024. So 22, 23, 24, you may get the audit, but after 24, I think you will not be in a push to get the even branch audit also. So we have to wait for the correct thing. And our president is from your area. Please make a request so that all the youngsters, all the freshers, they will be getting the bank audit, because you can represent our ICI through president to RBI, so that everyone will get benefit, because everyone, it's a very good knowledge we are getting it, and very good income also we are getting from the bank audit. And if they dropped, and if there is any change in the audit appointment also, it's a problem. And even the latest thing I want to tell here, one is the audit allotment for the firm is confirmed. Audit allotment for the existing auditors are confirmed. But audit, that is for freshers, for the fresh appointment, is the audit allotment is being considered for the proprietorship firm and not against the individual. So they say that RBI will allot for the proprietorship firm. That's all. And they never say that it is not allotted to the individual. But in our MEF, we say that they are mentioning the eligible category only. They never say that you are getting the audit. So eligible category is, say I am practicing my individual life, my eligibility category is individual. So I am in category 4. But as per the Chartered Accountant Act, proprietorship firm includes individual. So this has to be clarified so that all the individuals will be getting the audit, because this is a very, very important area, because everyone is concentrating on the bank audit, and it's of importance, because since our president is from Calcutta, from your region, please you make a joint representation to our president, and see that the entire ICA members get the bank audit on time. And there is no, just like statutory audit, there is no panel there is no centralized panel for revenue audit, stock audit, and other audits. So even if this is being also mooted, then all the youngsters, irrespective of the experience, they will be getting stock audit, revenue audit. They need not apply to an individual banker. If these appointments is being centralized, just like statutory audit, then this has to be done only through the professional development. It's only a suggestion, and if our president or anyone is hearing this, I am giving this suggestion because all the chartered accountants will be eligible for stock audit, revenue audit, NPA audit, and all kinds of audit. But normally the decision of appointment left to the discretion of the individual bankers. This should also be centralized by ICA, and only through RBI, the list has to go to the bank. So if that is there, everyone is being considered. It's only a suggestion. But apart from that, I have received one question from Mr. Sanjay. Sir, please give some examples whether when an auditor can declare CC account as technical NPA. Here, there are 8 methods of NPA. Mr. Sanjay, I want to say about the 8 methods of NPA for the cash credit account. Just give me 5 minutes to explain this entire method. One is the step 1 says that you have to add all the interest for the period from 1/1/22 to 31/3/22 and go to the credit side. You have to add all the credit that is being made into the account for the period from 1/1/22 to 31/32. You have to compare it. The interest is due to this extent, and this is the amount paid. You have to compare it. If the amount paid exceeds the interest, then that account is genuine. That has to be treated as standard. In case if the interest amount exceeds the amount paid, then there is still some amount has to be paid in the form of interest. Then that account has to be treated as NPA. Here I am taking only the last quarter. Why I am taking last quarter is we are doing audit for the year ending 31/3/22. So audit quarter, last quarter we are considering, but if you are a content auditor, you have to do this exercise even for every quarter. This you have to do it, one. And second method is, at least on any one particular day, a limit should come below the outstanding, below the sanction limit. Suppose for the entire 90 days, if the outstanding balance exceeds the sanction limit, then that account has to be treated as NPA, otherwise not. This is second method. Third method is, the limit, outstanding limit is always below the sanction limit. If on no day the outstanding limit exceeds the sanction limit, yes, it is okay. Even if that is the case, in step 3, you have to add all the interest debited, and here interest debited includes the penal interest and not charges. You have to add only the interest, and interest includes penal interest and not charges. Go to the credit side, add all credit, compare it. If the credit exceeds the interest, then everything is serviced, otherwise it is not true. Then step 4. Step 4 is, if the outstanding balance continuously exceeds the drawing power. If the outstanding limit exceeds the drawing power for a continuous period of 90 days, then that account has to be treated as NPA. And for step 5, which is related to the sanction of this related to the renewal of the loan. The renewal of the loan, it is related to the renewal of the loan. That means a loan has to be renewed within a period of 180 days from the original due date. 180 days from the original due date. If it is not renewed on 181st day, that account will become NPA. So renewal of the, based on the renewal of the limit also, you can do it. Then step 5, step 6 is non-submission of the stock statement. Also make the DP as 0, then that will make the account as NPA. And even temporary and permanent extension should also be part of that 180 days. Suppose if the bankers say that we have temporarily extended, ad hocly extended, and short renewal, we have given anything, you can do it, but everything should be part of that 180 days. And if there is, so in this manner, you can classify the cash credit advances as NPA. So there are 8 methods of identification of NPA. Here also, I want to see, generally in stock statement, movement of stock is not showing. Is there any standard format for a stock statement? Sanjay sir, for this, please compare the stock statement of previous months. Then you can yourself form your opinion that stock is being moved or not. But in each and every stockman, opening stock is there, add purchases, less sales, remaining is closing stock. That's a list. So you have to see whether stocks, you have to compare the stock item also. That is also possible. Based on that, you can do it. And with reference to NPA of term loan, I am just touching the term loan. In term loan, there are 5 methods of repayment, because everything with reference to term, with reference to NPA is, with reference to term loan is everything you have to do as per the sanction letter. There are 5 methods of terms of loan repaid. One is interest plus principal. Second one is EMI. Third one is holiday period interest plus EMI. Fourth one is bullet repayment. And fifth one is balloon repayment. So here you will be getting the problem for this year, that is about the bullet repayment. Because bullet repayment is nothing but FITL. FITL, last year, RBI has given some concession for the COVID transactions. For that, all the unserviced interest or unpaid interest has to be converted into FITL, funded interest term loan, and all those interest has to be paid on or before 31/3/21. If it is not paid on or before 31/3/21, add 90 days, 2021. If the amount is not being paid on 29/6/21, then that account FITL will become NPA. If FITL will become NPA, all the borrowers, all the accounts will become NPA. Okay, then that is another problem that we are going to face now. The manager will definitely say that, sir, we have restructured FITL. And here one has to see that with reference to restructure, I'll simply explain. Before you have to bifurcate the restructuring before COVID and during COVID. So if before COVID, any restructuring is done, the status of the account comes to the next thing. Suppose if you are restructuring standard account, then that will become substandard. If you are restructuring substandard, that will become D1. But in COVID, if you are doing NPA, if you are in COVID, if you are doing NPA, there is a restructuring, no further downgrading is possible. Even that will not be reflected in CIBIL also. But the RBI has come out with a clear instruction that the interest has to be converted to FITL. So that means this is the thing they are allowing with reference to restructure of COVID loans. Once if the restructuring period is over, then it will automatically become normal thing. And here, definitely the bankers say that. Definitely the bankers say that, sir, we have done the restructuring. No, it is not possible. Because as per the norms of RBI, if a restructuring account cannot be restructured once again within a period of 1 year. This is a normal rule. This bear in mind. And if at all they are saying that, sir, we have restructured FITL, don't hear that, ask them to produce the circulars. And this circular should be issued by the bank's head office. In that circular, they will mention the RBI rules and regulations, and based on which they are doing it. According to me, according to my information, so far, the restructuring of COVID loans, I have not seen any circular like that. If it is that, it maybe within these 3 days or 4 days also, you may get new circular like that. Please go through it. But don't hear the manager's stories. And another request is with reference to NPA, because NPA is ocean. Because I used to present paper on NPA. It's an ocean. It requires minimum of 3 hours to get it explained. So and I just charged the highlights of NPA. There you have to take care of 3 things. One is you have to know how to calculate the unrealized interest. And you have to know how to calculate the erosion in property value. These are the things that you have to take note of it. Unrealized interest calculation you should know, erosion in property value, and one can say, sir, I don't know anything about NPA, but I want to easily identify NPA. What to do? Sir, how is there any technique? Sir, now so far I have covered this presentation for say for 12 so far. I used to tell a very novel technique of verifying the NPA. So you don't know anything about NPA, rules and regulations you don't know, but blindly you want to verify. Even a lender can also verify. For this, please ask the manager to produce the loan trial balance. List of loan trial balance, which contains from the date when the branch is opened till now. You have to take loan trial balance for the period when the branch has opened till now. Now you have to take a copy of loan trial balance. Now I am telling the Baba Mudra technique to you. It's a very, very simple thing. Within 2 minutes, you can identify the, but classification is different. But whether the account is NPA or not, you can easily identify. I am just explaining you the Baba Mudra. Baba Mudra, left wing. This is date of sanction. This is due date of sanction. Just from the top, you just put it. Date of sanction, due date of sanction. And if the due date of sanction is go to the outstanding balance. Go to the outstanding balance. Whether the account is closed or not. If it is closed, leave it, again come back. Then if the account is not closed, and see whether that account is being classified as NPA or not by the branch. If the branch has classified as NPA, you can leave it. Again, if they are not classified, then you have to make that account as NPA. Because you are going audit for the year ending 2022. This is 2005. In agricultural branches, they will automatically classify all those advances as standard only. The loan is being given in the year, a loan is due on 1999, you are going audit for the year 31/3/22. They are putting this as NPA. No, it is not, they are putting it as standard, but it is not a standard. It has to be classified as NPA. Even you can went and directly you can recommend this to D3. And if there is no document, you can directly classify that asset as loss asset also. So this is the left-hand Baba Mudra, date of loan and due date of the loan. Based on that also you can do it. And now coming to the right-hand Mudra, right-hand Baba Mudra is, this is amount sanction, this is outstanding balance. Just pull it. Outstanding. If the outstanding balance exceeds the amount sanction, then that account will definitely fall in the category of NPA. If the outstanding loan amount sanction is 10 lakhs, if the outstanding amount is 2 lakhs, so nothing is serviced. So every account will be treated as NPA, but they can say that, no, the money will come after some days, sir. The party is going to sell some property. Sir, the party is going to some other bank. Sir, he's a very good customer. He has got very good collateral security. So here, the collateral security base is not the base to arrive at the NPA. NPA is different, collateral security is different. This point you have to bear in mind, and you have to easily identify by using the Baba Mutra. So I'm just going in a rush because I'm hardly left with another 30 minutes. I want to complete some interesting portion. Important portion I want to complete it. And if you got any doubt, please put it in the chat box. I'm going to the next point. I think with the Baba Mutra, you can follow this. You can tell the technique to your friend. Just pull it. Within no seconds, you can easily identify the NP. And advances to non-corporate entities beyond the limit set by the bank. Normally, if any advance is being given to the very big customers, then who is a non-corporate entities also, you can do it. And Sanjay sir, thank you for your complimentary words, and also Sashi, thanks for your observation. And if you are satisfied with my presentation, I am the happiest person today because your EARC is being as the first opportunity to present the paper to you. And then EARC. Thank you. And advance to non-corporate entities beyond the limit set by the bank, you have to verify. And due diligence report in respect of consortium advances and bank. So first you should know what is a consortium advances. Bank. In consortium advances, some 4 banks or 5 banks, they sit together and there is a leader for them. And based on the lead bank, all the consortium members, they stand together and they sanction the total loan. And this total loan is being divided among the four banks or 5 banks. Each and every bank, they have got their own security. And in consortium advance, if you want to classify, one bank, if the borrower is classified as NPA, other bank, they don't want to classify. They can do their individual working. And with reference to multiple banking, here there is no leader. Each and every banker, they can consider a loan, they can give the loan with even sometimes they are getting no objection from other bank, but they are taking their own other property and they are sanctioning the loan. So that is called as multiple banking. Even in multiple banking also with reference to NPA, individual banks NPA classification is being taken into. So due diligence report you have to conduct as per the consortium advances. Suppose if you are going audit for that, those branches, you have to see whether the due diligence report is being produced for your verification order. Lead bank details in case branch is not a lead bank. Suppose if 4 banks are financed and State Bank is the leader, other banks say IOB, Bank of Baroda, all are part of consortium members. And if you are going audit for Canara Bank, you can ask the lead bank report because lead bank, they have to submit monthly report to all the lending members. So whether all the money, because the lead bankers, they have to give the weakness of the party. Because everything, that means you have to do the SWOT analysis about the party. All the reports that you have to go through and whether all the caution that has been given by the lead banker is being taken care of by the other members. So as an auditor, you have to call for the lead bank report and you have to verify. And inspection of physical securities charge in the bank. So whenever any collateral, here the physical verification of securities means when the collateral security is to be taken into account. See, what are the kinds of securities? There are 2 kinds of securities. One is primary security, second is collateral security. Even this primary security is the security which has been created out of the funds generated, funds given to the party. That is the form of stock and data that will be considered. It has to be inspected by the party. A physical verification you have to carry out for the purpose at the time of stock verification. And if it is a collateral security also, few bankers during the stock audit, they say that you please go and verify the physical, you have to go and verify the physical verification of the collateral security. So that means every month, every year, they have to kind out the physical verification of the inspection of are charged to the bank. So this exercise you have to see. Normally in the previous thing it is not there. Here they have said you have to verify. And unauthorized overdrawing limit. Here overdrawing for beyond the limit. The loan is 10 lakhs and the manager power is 10 lakhs. But if it has gone beyond 10 lakhs and if it goes to 15 lakhs, so there is no notification is being given by the head office or regional office, then that is to be called as overdrawing, and it is to be called as unauthorized overdrawing. So this is also another added work to you. You have to verify this. And no insurance coverage. So another important thing, they are giving importance for the insurance policy. Insurance policy, they are giving importance. So you have to call for the insurance policy and you have to see whether the insurance policy pertains to this customer and the address where the godown is, the address of the party, and all the godown stock should be included in the insurance policy. That normally they won't. Normally they taken the insurance only for the office address. But if the godown is there, if it is scattered throughout some 5 places or 6 places, all those addresses should be included in the insurance policy. And you have to see the another important thing is the items that is insured. Next one is the validity of the insurance. Whether the insurance coverage is there at the time of your renewal or not. And another thing that you have to carry, you have to see about the insurance policy is whether the insurance policy is under insurance or fully insured. What is under insurance, fully insured? Let us take if the loan is sanctioned to the tune of 10 lakhs towards stock. So insurance has to be taken for 13.5 lakhs. Say 13, one second. If it is margin is 25%, the loan is 10. 10 divided by 3 into 4, it works out to 13, minimum of 13.34 lakhs insurance policy should be done. Normally what the bankers they are taking insurance only to the tune of 10 lakhs. So that means if anything goes wrong, only pro rata insurance coverage is available to the party. If they are taking insurance instead of 13.33 lakhs, they are taking insurance only for 10 lakhs. That means it is called as under insurance. So these details also you should take into account at the time of verification. Next thing is the item should also tally. The loan is sanctioned for furniture business, but insurance is being taken for some machinery or for some other item. So it has got no relevance to the business. So that point also you have to analyze. You have to come to the conclusion at the time of verification of the insurance. Then another situation is the location, then quantum, that's all. And you have to see the banker's class. If the loan is being sanctioned by your bank, suppose we are going audit for the Canara Bank, you have to see whether the Canara Bank name is there in the insurance policy. That means no goods are hypothecated to the bankers. So banker name should be there. These are the important things that you have to verify with reference to insurance. And other things are, this is a very important that you should know. Red flag account. What is a red flag account? This is a thing that you should know. RBI in its newly introduced LFAR has requested the chartered accountant to report about the red flag account. And it is stated that it is an early warning signal given by the RBI. So suppose if any raid is being conducted by the regulatory authorities, that is also a violation. So that also gives scope for the that gives a scope to call an account as red flag account. And if any raid is being conducted by the tax authorities also, that account has to be called as red flag account. If you identify an account as red flag account, that is nothing but this account may be a fraudulent one or may not be a fraudulent one. To get it identified correctly, a forensic audit has to be conducted by the bank within 6 months of identification of red flag account, and forensic audit they have to report, forensic auditors, they have to report that accounts are not subject to fraud. So this is an added thing that is, this has to be taken care of by you. If you can ask the manager, is there any red flag account? They say that no. But as an auditor, you see whether any raid has been conducted against this party or not. So based on that also you can easily identify one account as NPA. Even fund diversion, even RBI says any fund diversion also amount to fraud. So if there is any fund diversion and if it is being approved by the bank's head office, it is permitted. If it is not there and if the fund diversion is there, then that has to be placed under the category called a red flag account. So this is an important thing. Please go to the Google, type red flag account, and you will get all types of information. Even I want to say one thing to the fellow members. I have released in our members benefit, I have released in our members benefit YouTube specifically for the bank audits. YouTube specifically for the bank audits. So the channel name is Ravindran V. You just type it. You need not. I don't want you to become the member, but if you at all you want to become, if you want to know it, you can just type Ravindran V, and you can get a list of 117 videos that are related to bank audits. How to do cash verification, what for each and everything, even for red flag account also I have given the presentation. So each and every word you have got a report. So if at all you want, even you can refer this to a staff to view. So they can understand what is a bank audit, because staff, they are coming with you. So they should be equipped. So a lot of members, they appreciated this, but just because the first time I'm addressing you, you can, if you want, you can view it. So red flag account is a very, very important area that you have to do it. So comment on adverse features and consider significance. They say that even 5 standard large advances that need management attention. The account is NPA, you have to do it. Even they say that 5 standard large advances, that also you have to go it thoroughly and you have to do it. And next one is leasing finance activities. In leasing finance activities, normally the ownership lies with the lessor, and charge creation, insurance coverage, and security inspection, everything you have to cover in your report. And now we are going for the asset classification, provisioning, and resolution of stress asset. Here they say that as a branch identified or classified into standard, substandard, doubtful, or loss asset through the computer system without manual intervention. Here they use the word without intervention of the manual system. So that means the system has to take care of it. There are different manner in which, system it will take, but it will take care. But who is operating the system? It is a bank official. And I will tell some of the modus operandi based on which the bankers, they hide the eyes of the auditor to get the signature. One is they are changing the due date from this year to next year in the master record, because the system calculates a due date based on these details that have been fed into the system. If they change the details in the master record, it goes to the next year. If they put the next year, then as on 31/3, that account will not become NPA. But the point says that, have you identified NPA with the system or without the system? If I say that if they change the due date from this year to next year, the system will never say that it is NPA. So this point you have to bear in mind. Second thing is, some other's money is being paid into your account. System will never say that it is somebody's money. So there are a lot of techniques that is called as NPA games. I know I've got some 17 or 18 areas to identify this NPA classification, because there's a role that you have to be very, very careful. It's a very, very simple thing, sir. You are not supposed, you have to verify the credit into the account. You have to see the genuineness of the account. There should not be any fund diversion, and the business activity should be genuine. And the main request to this, once again, I'll repeat, RBI has already started to issue notice to the chartered accountants. Please do not, for the wrong classification or non-classification of NPA, Don't yield to any pressure given or created by the branch manager, regional manager, zone manager, general, because you have to save your certificate. So this is a thing you have to bear in mind, because to identify NPA is very, very difficult. You can identify NPA, but you have to give everything in MOC. Somebody, they can come and say that, no, you please put it in LFAR, don't give it in MOC. It is also wrong. Only when you give the effect in MOC, it is final. If you give in the LFAR, it is only a story. Please, if at all you identify NPA, please put it in MOC, but not in LFAR. Is this identification and classification in line with the prescribed norms of the IBA? They want you to commit specifically. If you say yes, that means all NPA is correct. And if you say that no, that means you have to give the list for the following accounts. I have disagree with the branch classification. And whether the branch is following the system of SMA 0, 1 and 2. What is this SMA 0, 1 and 2? This is called as special mention account. Here, there are three, I think I can say that there are 4 circulars they have issued, but 4 circulars I am not going to discuss now. There are 3 circulars that is relevant to that is the 4 circulars that are relevant to the NPA. One is one circular they have issued dated 1/10/2021, and if your management permits, I will send the link of all the 3 circulars to you. 1/10/2021 they have released a circular, and second one is they have issued clarification circular in the month of November, and another one is they have issued another clarification circular in the month of February. See, in that clarification circular, when you read the previous circular, that is original master circular on 1/10/2021, I came to a conclusion that NPA has to be classified. They use the word more than 90 days. So more than 90 days, from where you have to calculate? I said, is it from the due date or from the end of the due date? By looking into SMA 0, SMA 1 and SMA 2, I came to the conclusion that it has to be conducted from the end of the due date. This is the original thing. But when you look into the clarification circular that they have issued in the month of November, they have come out with an example saying that an account is due on say on 31/3/2021. When they run the system, and if the party has not made the payment before 31/3/21, the system will say that that account is overdue from 31/3/21. From that, they are adding 90 days. Previously, when you directly read the master circular based on the SMA 0, then you can say that you have to do the calculation from the end of the due date. But it's clearly explained by the Reserve Bank of India in its clarification circular that you have to calculate the 90 days from the due date. So instead of 30th June, the NPA comes to 29th June. So this is a very, very important thing. You have to read the circular minutely. So you have to calculate. See, in almost I covered this NPA presentation for 4 branches. In all the 4 branches, I said that you have to calculate the NPA date from the end of the due date. But based on the reading of the master circular, now it is clarified that you have to take the 90 days calculation from the due date. So this is an important thing. Please go through the master circular of 1/10/2021. This is a very, very important thing. And that is NPA cutoff date. What is NPA cutoff date? Any loan sanctioned on or after 1/1/2022, any loan due or sanctioned on or after 1/1/2022, you need not bother. All the accounts will be classified as standard. These are 2 important things I want to say about this. And about the SMA. SMA is SMA 0, 1, 2. It is for SMA means special mention account. An account is due. So for the another period of 30 days, that is called as SMA 0. And it is overdue between 31 to 60, it is called as SMA 1. And it is overdue between 61 to 90, it is called as SMA 2. So this year, you are to give a specific certificate with reference to SMA special mention account. But you will not be paid any fees. but you have to give a specific certificate with reference to SMA 012, and you have to certify that the branch has classified every 012 correctly or not. So this is an additional thing that you have to give this year. And whether auditor is disagreed for this, also you have to give a specific report. I have received some 2 questions. Sir, okay, due to paucity of time, we request you to conclude in, okay, Anil sir, I will conclude. Conclude with this. And COVID relaxation for NPA classification relevant to here. Yes, Gajraj sir, please see the last year NPA circular issued by the Reserve Bank of India, and they ignored the COVID period. They ignored the COVID period, saying that it is not in the calendar. So remaining status, as usual, you have to do it. And also indicate the required changes whether have been recorded in suggested the memorandum or not. That is, you have to give the MOC. Outstanding in excess of 10 crore, which have been either downgraded or upgraded. Here I want to say one thing. They are using the word downgraded or upgraded. What is downgraded? Downgraded is from standard to substandard, substandard to D1, D1 to D2, D2 to D3. You have to gradually you can do it. Gradually you can do it. That is called as downgrading. Now coming to the term upgrading. Upgrading means today you want to upgrade the account. Party has paid some amount. You are not supposed to upgrade. If at all you want to upgrade, the party has to make all the payments as of now. What is the due as of now? The party has to make. From now they can do it. So if at all you want to classify that account standard, the party has to make full payment, which is due as on today. Then only you can upgrade. And there is no upgradation of D3 to D2, D2 to D1, D1 to substandard. There is no such thing. If at all you want to upgrade, you have to upgrade from D3 to standard by paying full dues. So here they say that list of accounts which have been downgraded or upgraded to the classification during the year. So you have to give the list. You have to give all the list. Then whether RBI guidelines in income recognition provisioning have been followed. So here in the LFAR, you have been asked to be, you have been forced to commit whether the IRAC, income recognition asset classification has been done by the branch or not, that you have to give specifically. Whether the branch has reported the restructure or rephase during the year to the controlling authorities, that is also there. You have to give a specific report. And whether RBI guidelines for restructuring on all such cases have been followed. I already bifurcated restructuring into 2 parts, before COVID and after COVID. And whether the same has been reported to the controlling authorities or not, you have to give a specific report. And whether the branch complies with the regulatory stance of resolution of stress asset, that also you have to give. Okay, I'm just going for the fraud action. Here, legal action, including the recalling of the advances, is an account has become NPA. So before issuing the notice, the bank, they have to recall the loan. Before recalling the loan, the bank has to prove that that account has become NPA. Then only they can recall the loan. One. And here, IBC is mandated, not initiated by the branch. So in insolvency and bankruptcy code is mandated because the company has defaulted, but the bank has not initiated the thing. That means you have to see only, as of now, only the limited companies are coming under the provisions of IBC and as well as the guarantor. You leave the guarantor, but IBC proceedings are now, it is related to the company is a default, whether the bank, they can go for IBC proceedings, and it is mandated, but the branch has not initiated any action. That also you have to report. Here, the IBC proceedings initiated and latest position. It is nothing but this is another older thing. It has been filed, whatever, and the suit is pending, and what is the status of the account? Just like that, the IBC proceedings have been initiated by the bank, and what is the latest position? So from the liquidator or resolution professional, you can get the list and you can update this in your LFAR. And ECGC claim lodged and rejected with reason, that is export credit guarantee claims have been made by the bankers, and ECGC, they rejected it. Then you have to go and analyze the reason why because ECGC claim is nothing but another insurance amount available to the bankers to recover the funds. But if they reject it, then you have to go and analyze the reason. Even we can say that all the government sponsored, that is CGTMSE claims, that is a Credit Guarantee Corporation scheme, that is up to even they say that up to 1 crore, even without security, they can make the payment, but the party has to pay the interest to the corporation. If the interest is being paid to the corporation, if anything goes wrong, then the insurance corporation, Credit Guarantee Corporation, they will make the reimbursement, provided the insurance amount has to be done, insurance premium against that loan has to be paid every year. Because the payment of insurance power lies with the bankers only. If the bankers by negligently they have not paid, and suddenly if that account has become NPA, then because of the negligence of the banker only, this account has the possibility of recovery is not there. You can give that in a specific. So here ECGC claim rejected. And NPA advances, evaluation has to be done. So evaluation, I already said evaluation is valid for a period of 3 years, and even valuation report has to be done at least. Even in NPA also, it has to NPA also you have to conduct the valuation report. And you know, non-funded advance, list of the borrowers details of default guarantee you have to give. Okay, I'm just going for another important area of P&L account. I think you know it. And here they say that you have to do the P&L account verification on test check basis. So you have been given cushion. You have been safeguarded, saying that have you test checked the interest? You can say that yes, I have test checked the interest, but on for what all the accounts that you have to give the list. That means you have to do it physically. You are not supposed to give the report blindly. Because I already received a message from our management that I have to stop, I have to complete within 10 minutes. Okay, here I am going to give importance for this area because this is going to be a very, very important area. And once again, with the caution, I want to start. If any fraud is undetected during the course of audit, then the auditor is held personally responsible for the loss to the bank, apart from losing our certificate, apart from facing court action, regulatory action, and everything. Identify a fraud. So a fraud, this is the session that I'm going to address in the afternoon, a fraud section for 2 hours. But anyhow, in LFAR, you have to see fraud detected and classified, but confirmation of reporting to RBI is not available at the branch level. Yeah, so somebody has detected the fraud and they classified this as fraud and they have submitted this details to RBI, but RBI has still to confirm that fraud. So that details you have to get it confirmed and you have to report it. And second one is whether any suspected or likely fraud cases are reported by branch. Now reporting by the branch to the higher office, is any list? So for this you have to get a letter from the branch manager. And if yes, then you have to call for the details. If yes, you have to go through the details and what is the status that is being mentioned or that is being given by the head office to the bank with reference to with reference to the fraud. And third one is fraud based on all your observation. Please provide your comments on. It's almost it covered each and everything on the potential area which might lead to perception of fraud. That is falsification of accounts, false representation by the borrower, misappropriation of funds, especially through the related. So here they have given a very big list. So this if you say yes, yeah, there is you are in danger. So please go through the list and you have to give it correctly. Otherwise, you will be in trouble. So here, if you go read this, even diversion of funds also lead to fraud. So whenever you are seeing the cash credit account, you have to see whether there is a diversion of funds or not. Whether the system of early warning framework is working effectively and as required early warning signal person from the classifying that as a red flag account. Is there any early warning framework there? Whether the same is being affected properly or not, that also you have to do. This is the thing I want to say about the today's presentation. Again, I'll say that LFAR coverage is ocean. For each and every point, it requires minimum of 15 to 20 minutes. But in audit, please don't take the audit very lightly. Be serious You are doing it sincerely, but be serious and don't leave any point. And whatever be there, please maintain the proper working papers. With this, I'm concluding my today's presentation. I'm handing over the thing to the organizers. And once again, I'll tell it's a proud moment for me in my life that I got opportunity for the first time from EIRC.
Thank you, sir. Thank you. Thank you for your wonderful deliberations. I think members are immensely benefited from your deliberations, sir. With this, may I request CA Rahul Lunta to offer a vote of thanks. Over to you, Rahul.
Thank you, Anil. Good afternoon, sir.
Good afternoon.
Sir, thank you for your time on a Sunday morning. And sir, of course, we are listening to you for the first time. It was a pleasure listening to you, sir. Sir, on behalf of the association and behalf of all the attendees who are here, so please accept our vote of thanks. And sir, next time we would want to visit you in Calcutta, spend some more time in Calcutta. Look, we will take you around in Calcutta, and we would like to listen to you in person, sir. So, sir, thank you very much for your wonderful deliberation. I'm sure everyone here has thoroughly enjoyed your presentation, sir. And on behalf of the association, I would also like to thank all the attendees who were there right throughout the session. Thank you for taking time out and attending the session. Very quick announcement. We have a full day seminar coming in next week on the topic of bank audit only at Park Hotel. Today's program is a non-CPR program, but that program is going to be a 6 CPR program. So we also invite all of you to attend the program which we are organizing. Sorry, it's not in Park Hotel, sorry, it is in Bengal Chamber of Commerce, please pardon me. So 26th of March at Bengal Chamber of Commerce from 2:30 p.m. onwards. Thank you again, and I look forward to your presence in the next program as well. Thank you. Over to Anil.
Okay. Thank you, sir. With this, we conclude the session. Thank you all. Thank you.
Thank you, sir.